lab. This isn't really about trading. Trading just happens to be the court I've chosen to step onto. What is this really about? It is about intention, not purpose. Purpose asks, what am I supposed to do with the rest of my life? Intention is much simpler. What do I want to participate in today? What experience do I want to create right now? And once I know that, I can begin aligning my actions to that intention. And if I enjoy the process, I keep showing up. If I don't, I choose a different intention and begin aligning my actions there instead. That's what you're watching on this stream. You're not watching someone trying to trade perfectly. You're watching someone practice aligning his actions to his intention in real time. You'll see me struggle. You'll see me lose focus. You'll see me return. Because life isn't about being perfect, it's about becoming a little more aligned than we were yesterday. And every time we align our actions with what we generally intend to experience, something changes. We experience fulfillment. And where there is fulfillment, there's usually a little more joy. So, whatever your court is today, let's step onto it together. Let's align our actions with our intentions. Let's move toward a little more joy. Now, let's get started. All right, in this session, we are going to do something a little bit different today. So, I am waiting for a couple of individuals to join, and then we're going to get started. And I don't want to go into what we're actually going to be doing today until after the individuals have joined that need to be here, because those are the ones that kind of requested this session. They had questions, and I wanted to make sure that the information was clear. But we are going to do something today that is very different from, I think, what probably anybody has actually seen. We're going to stop looking at, we are here. Thank you, Seed. I appreciate it. Beautiful. You are one. Now we need the second. What we're going to be looking at is life asset management. How do professionals go about the market? What I mean by professionals, I'm not talking about traders, okay? Because traders are professionals too. What I'm talking about is professional money managers, asset managers, the individuals in hedge funds, the individuals in places like that. Sundaram, sir, good evening. It is an absolute pleasure to have you guys. Let's get into this. Okay. Good evening, good afternoon, just, you know what, wherever you are in the world, I just hope you are having an amazing day, and I hope that you have an even better weekend. All right. I've been up since about 3 o'clock this morning, so I needed Celsius this afternoon. I'm a little bit tired, but we're going to wake up here in just a second because this is going to be fun. Does anybody have charts? Live charts open and up for them right now? Anybody? Bueller TikTok. All my friends in TikTok, you guys have any charts over there? So, Darum, you have any charts up operating on your own screen? Anybody? Okay. What I'm going to do then is I'm going to pick up a day, just a random day. We're going to blow this chart up. And if you're on TikTok, you know what? Come on over to Tube. Come on over to the Purple app. Come over someplace so you can see the screen in wide format, because you're going to want to be able to see everything, and I can't bring it to the best place for TikTok. I just can't, not to explain and do what it is that I'm going to be doing here. And so I'm sorry for you individuals on TikTok. You can listen, but you're not going to be able to see everything on the screen. It's just not going to work out that way. So what we'll do is we're going to start by putting on a 4-hour chart just so we can see a big, wide breadth of price action. And what we're looking for is we are looking for a trend, but I don't want to know pullbacks and times and different things along those lines. I want it to be as random as absolutely possible. And so we're going to go back over here to, and I need to be in March timeframe or later. So we're going to go back here to April 2nd, okay? And I'm going to replay data, and we're going to do April 2nd. Frankie, Win, pleasure. Thank you so much for stopping by. Appreciate you, sir. We are about ready to do a little bit of replay because I'm going to show something fairly interesting. Andre, welcome from over at TikTok. Pleasure to have everybody over from TikTok. If you are in TikTok, it might be difficult to see some of my charts today just because of the narrow screen. Head on over to Tube or Twitch and get yourself set up for a wide screen and you'll be able to see more of the information. All right, I need shut down live. I need to open up the replay. I need to select my symbol. I need to select my date, and that was April 2nd, wasn't it? I do believe so. That's a day that I don't even remember looking at charts. And we're going to say, well, shoot, I should have. Oh, well, 903 is fine. It doesn't really matter. I just need a trend. I need a trend because what I want to do is I want to try to go short at the lowest point possible of a trend, because this isn't about exits. We're not going to deal with exits really today because each trader or asset manager has a different reason for exits. You know, here's the thing about asset management and investment management. Okay. Your customer is the investor. And the investor is going to call you when they want to sell. Now, if there's an asset that you want to sell, that's a different story, but you're selling it because you want to. It's there. It's not because you're a trader and doing short-term pricing and you're just looking for an exit. So we're going to be primarily looking at our entries. Exit will be important because, and you'll see why at the end, but it's not our primary focus today. Our focus today is entries and why and how we're going to enter the market through inventory, through space, not through just price and a stop and looking for a risk reward ratio of some form. And the reason why we're doing this, I will tie all of that in at the end. I want to do the demonstration first, and then I'm going to tell you why it's important. And then I'm going to give you an option that's going to be a fix. And this is something I'm going to start doing moving forward this next week. All right. So looking forward to this. Yes, sir. Euro USD I am looking at. Okay, so you're looking at the pairs. Okay. I don't have pairs access on my platform at the moment because all I have is just the CME and CBOT and one of the other ones. So I don't have pairs as access to my charts. But we're going to go through this and you'll see that you're going to be able to do exactly the same thing that I'm doing because we're not going to be on order flow charts or anything else along those lines. You're going to see exactly what it is that I am doing. Okay. And you're going to be able to do the same thing on your currency pairs. All right. So we are going to start the replay. I need to bring this to a much shorter time frame chart. We're not doing anything in the context of auction market theory or anything else. Price action's going up right now. We're in a nice little pullback. I want to take this off. And at the moment, I'm going to come in here. I need my DOM trading enabled and show trading. And I'm going to short right now one contract. Boom, short. Okay. Now I want to move this forward. I want to move this forward. And I want to see price action and see if we can't get price action to start going up after my short. Dang it. It came right back down. There we go. Perfect. Perfect, perfect, perfect. Okay. I'm now down $3,500 in this position. Okay. There's not very many retail traders that are going to be able to take a $3,500 loss or expense in their account. Okay, they're just not, especially if you're doing prop firms and things like that. That's what this is all about. Okay, now let's bring this chart and make it so it's easier to see. And we're still going up. What I'm waiting for right now is I'm waiting for a pullback, and I'm hoping and praying that I get a pullback right now. No, I'm really not, because I don't care. All right. I could be $30,000-$40,000 in a position. If I have a $300,000 account, for example, 10% is a $30,000 expense. All right. 300,000 is 30,000 for 10%. 1% is 3,000. So I'm only down about $3,000 right now. But most of these individuals have billions of dollars. So let's say 1 billion, 10% is 10 million. 1% is a million. So until I get close to a million, I don't even care. But let's say I only have 1 million. Well, now I'm looking at, 10,000 on an expense. Okay, beautiful. How do we manage this? Price action's coming down right now, right? Instead of turning around and putting a stop in or anything else, if I'm underwater and I want to get out of this position, this is what I'm going to do. I'm going to start selling more. Look at where price is now, and I've only sold 10 contracts. I'm only 10 short right now, and look at price. Look at how close price is to where my entry is now. On a pullback. So what do I do now? I turn around and I say I'm in 10, I'm short, so I'm going to want to buy at the limit 10 just below this area so I can get myself out of the market. All right, on this pullback, on a simple pullback. That's all I'm trying to do. And we're almost at entry already. And we really haven't pulled back very much at all. And now we're going to move forward. We're going to see if it happens. Do we get our target? Not quite. Not quite. Not quite. Target. Up 1585 on the position after being down 3,000. And we barely had to move to get to a break even. And all we needed was 10 lots in order to do that, because all we entered was 1. I used inventory, and I used space to get me out of the market almost flat after being down 3K. This is how asset managers manage their accounts. They don't have a stop. They don't care. They're averaging themselves into the market. They know where they're wrong if they need to get out, but there's so many asset classes and diversification going on that they can take an expense on one asset and still be fine on all the rest. You guys want to try it again? You want to see the same concept again, or do you have it? Do you understand what I'm talking about? Do you see the power of that? You're no longer relying on a stop. You're allowing inventory, the amount of contracts you have available based upon the amount of assets you have, to manage your risk in a position. Seed of life, right? Yeah, did I blow your mind again? See, everybody in trading thinks about a stop. Here's the problem, right? This is the problem. Let me throw this out to you and what the problem is in prop firms, okay? All right? Most prop firms, Amar, you're amazing. Sushi, you just you know what? I need to get you a bonus or something because you're amazing. I just truly appreciate you. The biggest disadvantage is that a high watermark trailing drawdown punishes success before it rewards it. Okay, that's the biggest key. Now, let me explain what a high watermark trailing drawdown is. This is how it works. Let's say you start with an account of $50,000 and you have a trailing drawdown of $2,500. Liquidation threshold is $47,500. So if you get down to $47,500, you're already at a loss. Okay? Now, your account is now at 50. So let's say you make $2,000 and your account's at 52,000. That sounds great. You got 2,000 a cushion, but wait a second. Because we have a high water mark trailing drawdown, what you have now is liquidation threshold becomes $49,500. Okay, so it's not that you have $2,000 to play with because you can bring the market down to 48 since you made $2,000. Your account value doesn't go up. What goes up is the amount of risk you can have in the account from from 48,000 to 49,500, okay? Or from 47,500 to 49,500, sorry. You only actually own 2,000 in profit, but your risk window is still only 2,500, and you haven't really increased the amount of room you have to trade. So if they did it the other way, where you have $52,000 of gains in the account, you should still be able to now have $4,500 in drawdown. But no, you still only have the 2,500. You don't have a cushion because it is a high watermark trailing stop. And it continues to do that as you grow into the account. That's why it's so difficult to pass an evaluation, because it's not that you create cushion in the account. You lose the cushion every time you create a revenue. Now, what happens if you're up 2,000, you're down 1,000? You should have $3,500 in cushion still. No, you don't. Not at all. The 49,500 stays the same, and now you're at 51,000. All right? And you're 51,000 in the account. You don't have that cushion. The cushion isn't there. If the cushion is not there, see, Round, thank you so much for the follow. I truly appreciate you. I hope this is helpful for you. If you have questions, please let me know. If you can, come over to the YouTube app so you can see the whole big picture over here and what I'm showing. And then you can also get the link to Discord as well. If you're interested, we have a Discord community that we're starting up, some great traders in there, some great individuals. Oh my goodness. And we're constantly going in and just teaching and training and doing all sorts of stuff. So if you're interested, come on board. Seed, why didn't I think of that at the first place? Yes, exactly. And see, we would love to have you if you did join. Thank you so much. Appreciate you. Now, this is the problem, right? This is the problem. If you guys want to, let's go through another example. Because here's the thing, right? At that 10,000, I didn't put a stop in there and actually show you what we were down, okay, when we came up. Because when you increase, when you increase your positioning, your inventory that way, your stop actually increases because you're increasing your amount of lots that you're in. And so let's say you only have $4,500 of risk, and then it will actually put a full stop and liquidate your position at 4,500. You can easily hit that by increasing your stop, by increasing your inventory, okay? Your lot size. That's the other issue when it comes to these prop firms. And this is how they win. See, you got to think about it, right? You really think prop firms are going to pay you out on a non-brokerage account because you're just giving money away? You think that Las Vegas was built on gains? No, the casinos were built because of an edge. It's the same exact thing for these prop firms, and this is the prop firm's edge. They're high watermark trailing drawdowns, forcing you to focus on stop and expense and not allowing you to utilize inventory and room to price yourself out of the market even when you're wrong. We went short down here. Price action went all the way up here, down 3,000. We ended up the position up $1,585. And now we're going to show how to fix it. But I want to show another example on what the risk is so we can turn around and work together to figure out what the answer is. Because here's the thing. Not everybody has $1 million. Not everybody has $300,000. Not everybody has the funds that they need in order to be able to do this. So is there an answer out there that we can use through static drawdown, through something that we can turn around and allow inventory to save us from some of the trades? And then is there a place where we can get a brokerage account if we pass an evaluation that we can increase the amount of money in the account so we have a bigger drawdown so we can use even more inventory to get us out of trouble, right? Out of positions. And now we don't have to worry about stops at all because now we have the bigger inventory. Because that's where we need to be. Traders in entry points, asset managers in exits. By utilizing inventory, by utilizing space, inventory, amount of contracts in, space, the amount of space on the chart, the movement. Does that make sense to everybody? Any questions? We're going to do this again, by the way. Where we're going to do it again is right here. I'm going to go short again right now. I don't even care. We're doing one contract short and we're going to open this back up again. Okay? And this time we're down 2,300 right now, 2,400. Let's get ourselves down a good amount. I mean, like a good amount. Like, oh my God, you know what? I just blew my account amount at $6,000. Oh, I'm on 10. Oh, that sucks. Okay, we're going to turn around and get out of this position, and we're going to go back to the 9 o'clock, and we're going to do this again because I forgot to reset my entry size, and I apologize for that. But we could have done it on 10 contracts, and that would have been really fun because now the numbers would have been astronomical. You guys are like, whoa! That was rude. I can't believe I did that. Well, whatever. Okay, we're doing this again. We are going to hit reset. And this is at 10:44. I need to actually set it to 9:30 at the US market. Set. Let's see. Questions? Sundaram, are you getting this? Are you getting the picture? Are you picking up what I'm throwing down here? This is for you. You wanted this. So what are the we're waiting for this. What are the disadvantages of the high water mark trailing drawdown? Winning doesn't increase your flexibility. As you make money, the floor rises with you. You can't take slightly larger risks just because you're profitable. One bad day can erase days of work. If you grind from 50,000 to 53,000 and lose 2,600, you may fail the evaluation even though you're still above where you started. It forces defensive trading because many traders stop taking valid setups because they're trying to protect the trailing threshold instead of maximizing expectancy. Scaling becomes difficult. Normally, if you earn more money, you can increase size. With a trailing drawdown, increasing size also increases the chance of violating the moving floor. As psychological pressure increases, every new equity high raises the consequences of the next loss. Ironically, success creates more pressure because it's stacked against us by the prop firms. They make it sound like this is such a great thing, that they're offering us something of value, and they're really not. They're making it more difficult to trade. They're making it more difficult for us to do what we may naturally be able to do in our systems, but we can't play by their rules. We're going to go ahead and short this again right now. One contract, beautiful. One contract, short, play this, and now let's see what happens. And of course, the market goes down. Well, that's rude. I don't want to be making money right now. I want to be losing money. Why do I have to be lucky when I'm trying to lose money? Goodness gracious. Let me be lucky when I'm making money. Okay, we're down $7,000. Down $7,000, guys. $7,000 down. Market's coming down a little bit. We're in a consolidation. Beautiful. We're going to slow this back down again. We're going to play it, and I'm going to start selling contracts. I'm only three. Did you see how far that rose and dropped right there? Now, if I put a stop up here, where am I at on a possible loss? Oh, I'm at $15,510. Okay, at a potential loss at $15,000 at 3 contracts. I was down 7,000. I'm only down 21 because I'm averaging myself, or I'm down 15. That should be down 21, but I'm only down 15 because I'm average cost myself into the market. And look at this. Richie, thank you for the follow. I really appreciate you. You guys are amazing. Okay, and so what's happening here is price action, right? We're now down 8,000 on the position. Well, I don't know how far price action is going to go, but I do have more contracts. I have more inventory. Let's say I can do up to 10 on a lot of these prop firms. Beautiful. Let me take it to 5. Let's see what happens at 5. I'm down 7,900. Let's say if I had a max risk up here someplace, I'm now down 21,000 after 5 contracts when I should be down 35,000. So do institutions hunt big players, liquidity, and quant fund? So, okay, quant fund and high volume in New York session make money so fast? Yes, you're understanding. Okay, beautiful. So good question, right? It's actually illegal to spoof and do other things in the markets. Am I going to tell you that? Am I going to tell you that people do not manipulate the markets? No. I'll pause this real quick because this is a good question. This is going to be helpful for everybody to listen up. Okay, if you guys are interested in trading, listen up. All right. I'm not going to tell you that there's not manipulation in the markets. I can't, because there is. And there always will be, because when there's money, there's going to be people out there that are going to want to cheat the system. Okay. But I want you to take a market like the ES. 200, 300 contracts can go off at one time. How many contracts is it going to take to get you to move price by a point or two? And moving price by a point or two and manipulating that and hitting a stop, how far is it going to run with a rotational market like the ES? Maybe a point or two? Is it really worth the risk of maybe not hitting those stops, or those stops not there, or those stops are moved, or something else happens and you don't get those 1 to 2 points of continuation? It has to be worth it for these big players to do that. And so when a stop gets hit, a trader automatically thinks, oh, well, they just ran stops. No. Most of the time, it's an auction issue. And what's an auction issue? It's caused by liquidity, because buyers, first, let's say, were strong up here, okay? But then they turned around and weren't strong anymore. Doesn't mean sellers are strong. The buyers pulled out. If buyers are not there, what is the market going to do? Continue to drop until it finds buyers. That's not manipulation. That's auction. That is auction theory, and an auction, and a healthy auction, working the way it's supposed to. And if your stop is below this low right here, and buyers don't step in here like you stepped in when you bought this, price is going to come lower looking for buyers stepping in. The fact your stop is there is going to push it down a little bit further, because your stop is going to turn into a market order, which is a market-driven order, which will have the ability to drop price if there's enough stops down there in sellers. That's why you see that blow off. It's not because they hunted the stop. It's because the auction is facilitating price. But it's much, much easier to blame manipulation than it is your area that you're stuck in, so you can manage your positions to fulfill the needs of the prop firm that's there to work against you in the first place. The real manipulation is the game itself, not the auction. And the game starts with, where's your account funded? I'm going to let that sink in for a second. You as a trader, I'm not blaming you, but you as a trader needs to start taking responsibility instead of blaming manipulation. Now let's take ourselves away from the U.S. markets for a second, the regulated markets with the NFTA, the National Futures Trading Association, the SEC, the Securities Exchange Commission, okay? What's the difference between the two? Securities and futures are two different things. Futures are derivatives or contracts off of securities. Securities are actually something you can own. You only have a contract in futures. You don't own anything. Okay. And so when you have the futures, right, you only have a contract, but they're still regulated. What does regulated mean? They keep a lot of the manipulation out of the equation. But if you are in the spot Forex market, that's the wild, wild west. There are no regulations there. That's where the manipulation happens, because there's nothing there to protect the individual investor from the manipulation itself. That's why you'll see wider swings. You will see players coming into the market, and you can see them, and they hide themselves because there's no volume data in that market, because they don't want you to see where they are, but they can see where you are, because they can get the orders from the actual brokers, and the brokers are doing it themselves. And you can't see them because there's no volume. When you have volume, you can see the auction. You know where the auction's going to take place. I do it every day live. I show it. I teach it. Don't believe me? Watch the video yesterday from YouTube when I went straight through my whole process. It's a 5-hour long video. Take a look at it. I go through it the whole day. I was down $5,500 at one point in time trying to trade the day before yesterday, which was extremely difficult to trade, and ended the session up $248. Is $248 great? Nope, but it's a lot better than a $5,500 expense. I even said in there too, you need to stop trading based upon your risk parameters. I'm still within my risk parameters, so I'm going to continue to trade. So it wasn't over trading. It wasn't anything else. It was still trading in the context of the risk parameters. But I wasn't doing the asset management. I'm working with stops because I really want to help you guys learn to trade, not to put a stop in and hope and pray it's going to hit a 1 to 2 risk reward ratio. We can't do that because we can't predict what the next tick is going to be, or the next tick after that. And it's hoping and praying with these areas. I want to teach you guys how to trade, and I want to provide you options that you can use so you can truly learn how to trade. Go ahead and enter your positions as a trader, a one lot. Manage your positions as an asset manager. I don't have the solution yet, but I'm working on it, and I swear I'm going to find it if it's there. Questions, comments, concerns? Anybody disagree with anything that I'm saying here? Please, this is all about theory. And what we want to do is demonstrate the theory at the live edge in a lab, so we can either adjust the theory or adjust the process depending on where the information isn't real. But right now, the theories are holding true within the demonstration, because this is an auction. And when you understand the auction, you're playing the game. But you can't play the game with stops because the auction doesn't care about stops, but it sure in the heck cares about inventory, and it sure in the heck cares about space. See, let them cook. Thank you, sir. Appreciate you. I'm off the grill. I need more Celsius is what I need. I don't have enough energy. Jeez. So boring. Anyways. Let's play. Let's play. Let's see what happens. Price action, rejecting here. Here's the low. I really want my entry to be above this low. So you know what? I'm going to sell a couple more here, but I'm going to leave a couple back just in case we break, so I have more inventory so I can do this again if I need to. Let's move forward and see what happens here. We're now down $5,000, okay? We're going to put in a profit target again. What do we have? We've got 7 on right now, so we've got 7 lot. Okay, beautiful. A 7 lot, and we're short. We're going to limit, put ourselves a buy limit in here. We're just going to put a little bit below. Do you know why I'm putting it below and not at? Does everybody understand that? There's a really big reason for this. Does everybody understand why I'm doing it just below and not at for a break even? It's not for profit. I'll give you that much. This is actually different from what we learned from the gurus. Well, yeah, they're gurus. They're gurus for a reason, because a lot of the gurus don't trade. They're really good at teaching. They're really good at selling stuff, but they don't trade. I don't sell anything. Not a thing. I don't have a book. I don't have a course. See, you've been around for a few days over in Discord and stuff. Have I ever tried to sell you anything? Anything at all? Anything. Now, see, price is rejecting here a little bit, moving my entry up a little bit more. We now have 9 on. I need to shut this down and hurry up and move this to 9 and get my limit order in. And I want to be out right there. Boom, $2,200 in revenue after we were down 7,000, and our stop would have been whatever. Oh, and look, I'm actually in more. So we're going to flatten, and now we're in 5,000 over a mistake. Let me tell you, when you're on the pits, in early days when we had pits before we went to electronic trading, I'm telling you, stories on the pit all the time were this. You heard this all the time. More money's made on mistakes than they are on actual real trades. More money is made on mistakes than actual real trades. This is a trade here. We're down $7,000. I only needed 7 lot to get myself not to a break even, but a profit. And the reason why I put my target below my entry point is so the slippage. And just because you're averaging in doesn't mean that the price is going to be exact when it's time. And if you put your stop at a break even, you'll still take a little bit of a loss. Let's give ourselves the ability to grab a little bit of profit, even though we were desperately wrong. And this is a trending market. Imagine a more rotational market that comes up like this and then drops. You don't even need that much size in order to be able to do it. You could get in at a low price. You can get in here. Price action comes up here. Price action starts coming down. You start bringing yourself in here. You still have room for profits. You could hold on to that size, or you could take a lot of the size off, a half or 3/4 off, basically at break even, and hold the other contracts down if you're in a rotational market. How do you know if you're a rotational market or not? I'll show you. Come on over to my live trades. I will show you when we're in rotational markets and when we're not in rotational markets, because I understand auction theory and I know when we're trading around these things. I can even tell you definitively where to draw your volume profiles on your time frame, where you're putting your own volume profiles on, because you know what? It's discretionary and you need to do it. Where do you draw your profiles? In an area of value that broke. What's broke? A close below. And what happens if it comes back into value again? You wait for a close below your lowest low, which is right here. What do you do from this point on this bar? You start drawing your profile. Why do you draw your profile from there? Because that's where the breakout was confirmed, the trend started, and now you're looking for value. And when you bring it in and you bring it close, what happens? Price action's trading into value area low right here. So it's going into value area low. Now you're looking for a value area high to confirm value. It doesn't do that. It doesn't even get up there yet. It closes below here. You better be shorting if this is your time frame, because you're expecting now a continuation to the downside, because price action can't even get back up to value area high. It can't even complete the auction in that area. Trend continuation to the downside. Find your place to go short on a pullback and go short. So do institutions only use footprints chart and use price action, or something we don't know? And we have only order flow chart to see big execution on footprint. Okay. No. Most institutional traders do not even use a chart at all, and they don't use footprints. They don't even know what a footprint is. You tell me you have a footprint chart, they're going to look at you like you're crazy. What they use is two things. They use TPOs, or volume profiling, and they use time and sells. What is time and sells? Let me show you what time and sells is. And I used to trade time and sells only. Time and sells only, not even auction market theory, nothing else, on news-driven stocks. That's all I would do. And I kind of try to show you how I did it a little bit. It's hard here because you don't have spaces in your spread, because you always have one tick of spread in the NASDAQ because there's enough liquidity. But when liquidity drops in a stock, you can have a 60, 70 cent spread in that stock. And if you try to buy it on a 70 tick spread, you're buying 70 ticks higher than price currently is. That's a money maker in there manipulating the market, because in stocks, you still have money makers, and money makers are there to provide liquidity in the market when the market isn't there, or when the liquidity isn't there. But in event-driven stocks, the liquidity isn't there because price action is moving so fast. The individuals trading can't get involved enough, and so you're able to manipulate the market more as a market maker. Is this making sense? This is why I don't trade stocks. This is why I'm in the futures market. The reason why I trade the NASDAQ, because the NASDAQ moves better than the ES does. The ES is a lot more size. I used to trade 25 lots in the ES all the time, but it's very rotational. And I can make $350 in a day when I can make $3,500 in a day in the NASDAQ in less time on one lot instead of on 10 lots in the ES to make that same $3,500. Risk is less. Everything is less in the NASDAQ. Why? Because the volatility is there. The volatility without the lack of liquidity. It's like the best market ever. Why would I go to gold? Why would I go to another market? Why? When the NASDAQ is right there, prime for the plucking. And it's perfect for asset management. Why? Because one lot is enough to get price to start moving in your direction in meaningful ways like we just saw. And all we need is one lot, one lot, one lot, one lot, and we're not going to move the market. We're not going to move the market. Let me say that one more time. We are not going to move the market, meaning that we are not going to be competing against ourselves in our own fields as we're trying to get inventory into the market to save ourselves from a bad trade. Okay, I'm sorry. I'll relax and get off my soapbox. But I'll be back on it in 5 minutes. Don't worry. Where's my time and sales? I know I have a time and sales in here someplace. I know I do. I have to. Oh, book. That's it right there. Let's try this one right here. And we're going to do the NASDAQ. CME, NASDAQ. Boom. Time and sales. Time and sales. This, my friends, ladies and gentlemen, if you all want to get into how institutions trade, this is how they trade. This is all the information they are looking at, and they don't care. Now, this order book is not moving, so I probably picked the wrong one. Let's see if I can find an order book that is actually moving. And I just haven't looked at this before because I don't need it on the NASDAQ, but it's here, and we're going to find it. And, oh, here we go. Advanced time and sales is exactly what it is. Sir, so amazing. Seed, nodding. You guys are funny. I appreciate you. I love this stuff. I love this stuff. What I love even more is helping individuals figure this out for themselves so they can turn around and achieve their goals, because that's what this is all about. So here's your time and sales. Okay. Now, what we're looking for here, and I don't have bid and ask on here. Time, volume, price. Okay. This is going to be impossible, and I'm going to tell you why it's going to be impossible in just a second, okay? And it's not really, but we only have one lot. See how we only have one lots in the NASDAQ? This is one of the things that keep the NASDAQ simple, is there's only one lots. And what happens when there's big trades? It's because somebody is bringing inventory into the market at a particular area. Who's that somebody? It's the individual that can bring inventory into the market. It's your asset manager. This is why the big trades areas matter so much, and why I look at dots, but not looking at the dots, I'm looking at the auction because I know what those dots mean. It just makes it very easy to be able to visualize, so I don't have to read the numbers. And when that's happening, an asset manager is coming in and going into a particular area because all of these trades are going off by one tick. So what are we doing here? We're hitting the offer, 50, a quarter, down to 50, 75, 50, 25, 50, 0, okay? And with 79, 80, 79, 80. If price action is strong, we're going to get back up to 82. We're going to get back up to 81 or 82 and a half. It's not. We're cycling back down again, and we're trying to buy into these lower prices down here at the 24s. I need to see if I can slow this down a little bit so we can see this. Okay, so I can show you what I'm talking about. 76 and a half, a seller here at 76, 75 and a quarter. We go back and buy the 76. Now we have at the 76, we have support in the market. Why? It's not the 76 and a quarter down here. It's the 76 because sellers sold the 76, buyers bought the 76, and then we turn around. Well, it was just the opposite. I'm sorry. Buyers bought the 76, sellers sold the 75 and a quarter, buyers are buying 75 and a quarter. That means right now, at this moment, sellers are in control of the market, and we have support at 75 and a quarter. Where is the resistance at? At 76. Now we have 74 and a half, 74 and a quarter, 74, 73 and a half. If buyers are strong, they're going to buy the 73 half, and they're going to bring the market back up to 76, and they better buy above the 76, or else price action is going to come back down into the 73 and a half. Let's play this and see what happens. Price action goes to 73 and a half, 74 and a quarter, 75. Can't even go back up to 76. Sellers come in 75, 74, 75, 74, 75, 76, 75. Buyers are now in control of the market. Buyers are now in control of the market, 76 and 3/4. Sellers come in again, 75 and 3/4. Where were sellers strong once before? 73.75. There's support, 73.75. If we see 73.75, we better see buyers stepping in at 73.74 if we're going to expect this market to have a chance to go back up and retest the 76.75. What happens? Price action, 74.5, rebuying it again at 75 and 3/4, 76, 76, 76 1/4, 75.5, buying at a lower price. We better see price action move up because we just bought a lower price. We bought the bid on the limit order and it got filled. We bought the bid on the limit order and we got filled. We better see the offer rising if this market's strong. 76.5, it rose by a whole point, 77. Buyers are now in control in this market short term. What happens next? We try to sell the 77.5. We try to sell the 77. We try to sell the 77. We buy the 75. We buy the 75. We buy the 75.5. We sell the 77 again when it goes back up to the 77. And we sold the 77. We rose by 77.25. Do you think this price action is going down? Do you think it's going to go up? We just bought the 77 and it went, or the 77.25 went up to 77.5. What do you think it's going to do? It's going to go up at this point as long as buyers stay in control. What happens? 77, 77, 77, 75. Buying 75. We went from 77 to 75. Remember, 73.5, 73 and 3/4 is our area of support. 76.25, 76, 76, 78, 78.25, 78, 78.25, 77.5, 77.5 bought. Price action should now get back up into the 78. And they're selling the 78 because price action got back up there. This, my friends, is how they trade in institutions. Using this and the areas that they mark within here of where they're expecting buying and selling to come in, and using the tape to time themselves in the markets. That's all they're doing. We just hit 79. We printed 79. I saw a 79 print. Now we're up to 79.25. We tried to get down to 78.5. We're back up to 79.25. Now, I will tell you this. With the advent of technology, they have created, and this is part of algos 2, and algos are in the US market, okay? They do exist, all right? When they do this, you have 6 or 7 of these all together. And you're not just looking at the one lots. And what happens is part of them bring in what they call iceberg orders. And they're grouping all of this together. So all the 76.25 are being grouped together. And now you have that plotting in a new time and sales. And that new time and sales is showing you where the size is grouped together, accumulated in one price, and then where the next ones are accumulated to the next price again. And then they continue to accumulating it. That's where it looks like a footprint chart. But they're not trained on footprints. Footprints is a new technology that didn't actually come out until about 2010, 2012. The first place that really created them was Sierra Charts and Jigsaw. And Jigsaw was a recreation trying to create what the asset managers are doing, because Pete, the guy that actually created it, was an asset manager in London. I can't think of his last name, but I knew him. He didn't get the technology absolutely correct. It didn't work like it did for the asset managers on the floor, but it was close. But I didn't like it, so I didn't use it because it wasn't exact. And they have 10 or 12 of these up on a screen with one of these, waiting for the areas, waiting to see the size coming in so they can go with the size and price themselves in on the actual entry. So they're not watching this go by so quickly all the time. They're looking at the icebergs. They're looking at the accumulation. Accumulation. Why accumulation? Because accumulation is what drives auctions. Don't believe me? Go to an auction for a car place or something like that and listen to the accumulation of yells at certain prices. That's going to be in a frenzy. The auctioneer is going to be speaking like this because it's going to be going so fast because there's so many buys and there's so many sells and he doesn't even know what to do. He's just talking. His price keeps on moving because people are accumulating in that price, in that area. Think of the markets the same way. This is why I talk about the markets in communication, because auctions are usually done in person through communication, either silence or actual rambling like I just did. And when the frenzy of communication starts to go big, you should expect to see faster movement, more prices, right? And if you start seeing big in a range, you should expect that range to be tested. And if that range is in a higher time frame portfolio range, you should expect it to last a while to keep you out of chop. Are you guys picking up what I'm putting down? Are you understanding what these guys are doing? Are you seeing how it's correlated to what it is that I'm doing? Are you seeing that what I'm doing works in the demonstration? I'm not here to tell you how to do these things. I'm here to show you, to demonstrate it so you can figure out how to do it for yourself, because we all perceive different information differently because we're all made up differently in here. The way I see information is going to be different from the way you see information. And why am I sharing this with you guys? Because we're all going to be doing something a little bit different, even though we're all doing auction market profile, because we're all in it for different reasons. And those different reasons get us to see perceived information differently. There's no scarcity. The biggest lie in the world is scarcity. The biggest lie in the world is scarcity. What is scarcity? How individuals and societies react to limited resources and the decisions they make based upon those limited resources. Resources are not limited. Let me say again, resources are not limited. Can oil run out 100%? Technology is going to create our need of movement and whatever oil is needed. Water. Can we lose water in certain regions? Sure, but there's going to be a plethora of water in others. People can move. We have desalinization. We are never going to be able to drink ourselves out of the ocean, the water in the ocean. And we have technology to desalinize that water. There's no reason for anybody anywhere to not have enough water ever for the end of time, for the amount of water that's in the oceans. Land. We're not going to run out of land. It's not going to happen. You're going to continue to push out. Think about the animals. Okay, beautiful. Yes, we need to conserve. I understand. I agree with that. But you know what? Since the beginning of time, species have gone extinct and new species have come back. It's evolution, and it's going to happen. And if that wasn't the case, we'd still have dinosaurs today and we'd be running away from saber-toothed tigers right now, scared to death for our lives, and definitely not sitting here in front of a computer because something would be eating us from the behind. Let's stop listening to the narrative of the world telling us doom and gloom, and let's start looking reality for what it is. Do we have problems? 100%. Yes. But you know what? The way they talk about our problems in this world, and you look at the macro, the big picture, if their big picture is true, we would be seeing problems and riots and all such sorts of issues within the micro, within our communities. I know all of you are different parts of the world. Are your communities functioning, or are they dysfunctional as the macro is telling us that the world is? You're going to see the problems in everyday society if the macro is really that bad. And if society is functioning, we're good to go. If the markets are functioning, they're good to go because the auction is intact. And as long as the auction is intact and you learn and you understand the auction and what's happening, Price, price, price can never confuse you anymore. A chopped market will never stop you out anymore, because you're going to understand where the chop market is going to be. And when you enter one, you're going to know it, and you're going to have the wherewithal to keep yourself out of it. Questions on asset managers. Anybody want to see another example? Or are you guys ready to move on to something else? The fix, an idea to the fix. And I'm not telling you that I have the fix yet. I'm working on it. Okay. And I'm hoping a couple of you that are really interested in this, Richie, you just followed. See, Round, you're saying that you love it. Okay. You guys are amazing and I truly appreciate you. Join Discord. Have some conversations with me. Let's put our heads together and figure out a fix. I have an idea. And I'm going to share that idea with you to get people really actually thinking about this. But we're going to have to put our heads together, because I can do this in a cash account. But that's not going to help those of you that don't have $15, $20, $30, $40, $50, $100, $300,000 to put into an account to invest, to do this and do it right. So you got a good idea? Thank you. Sir, do they trade a fraction of a second setting buying so fast that generate profit for investors? That happens, yes, in some of the algos and some of the Wall Street places, yes. But it's not the norm, okay? It's not the norm. And the algos are not the ones that are controlling the market either, okay? And retail traders are not adding the liquidity to the market because the asset managers are still going to, all right? Because they're only going to play where the other big players are playing, and they're all going to be working together. I mean, you got to remember, do you guys understand? Let's put a yes. So I want you to spam a Y in the chat or an N in the chat for yes or no to this question. Do you guys understand why the Wall Street Journal exists? Yes or no? Yes or no? Y or N? The Wall Street Journal. Why does the Wall Street Journal exist? Do you understand why? You don't have to tell me why, just yes or no. And if you think it's for news, put a no. Now, you guys are all quiet. Am I just talking to myself here? That's fine. That's fine. I'll just pretend like you guys said no. Well, good. It's all good. It's all good. I'll participate on my own. The Wall Street Journal is there for major CEOs to talk to one another. The Wall Street Journal is there for CEOs and top executives and the top financial companies in this world to talk to each other. They communicate. It's almost like a code. That way, they all know what's going on and they're all correlated to save their businesses if something were to happen, to be able to capitalize so they can all stay the same in the context of the lead of capitalization. That's why. The ones that go off the beaten path, the Bear Stearns, the Washington Mutual, some of you may not be old enough to know what those companies are. Bear Stearns, around for 120 years, huge investment company, got nailed in commercial mortgage-backed securities. Why? Because the securities were securitized in tranches. And think of it in risk and paper. A paper, B paper, C paper. Okay? It's all about credit. Credit is a credit, right? Your good credit. B credit is tranche 2, and C credit or D credit is tranche 3. And yes, we securitize some things with F credit. Okay? Just to get it in to the market because there was such demand for these products. Bear Stearns and Washington Mutual and some of the other banks, even the top third bank at the time, I don't want to name, turned around and purchased a lot of the tranche 3 for extra payments from servicing the loans over the period of time of the loan. And those servicing fees can be pretty high. But when the stock market crashed in 2008, the liquidity froze in that market. I was on the trading floor one day at like 11:30 at night, finishing up a securitization of a deal that I was going to take to the floor the next day. Came back to work at 6 a.m. The spreads went from a quarter basis point, so 0.25 of a point, to 1.25 points. And that's the cost to do a deal. So think about it. If you have $1 million deal, okay, and it's a quarter basis point, right? So what is it going to cost to securitize it? Well, $1 million, 10% is 100,000, 1% is 10,000, 0.25 is $2,500 to cost to securitize that deal. And that goes up to 1.25 overnight. So 1% is 10,000. So you're looking at 12,500 to securitize the same deal. Who's going to pay an extra $10,000 to securitize a deal when the whole move happened overnight? No one. And so the pipeline froze. And now we don't have that bank anymore, and we have Wells Fargo, who in a fire sale deal to save the financial markets of the United States purchased that bank at very low prices. And good old Uncle Warren, who got a paper and all of this stuff, turned around and put a bunch of money into these things to keep everything afloat. And what's a paper? A paper is like a bond. And he charged these banks like a 20% interest rate to loan money to them. He didn't save it, he scalped it, just like the founding fathers did when they built the United States of America in the first place in the Constitution. Look at the Constitution. Most of the Constitution in Articles 3 and 4 is all about restorations of the war. Who's going to get the money that they invested in the war in the first place? Why do you have the Bill of Rights as the first 10 amendments of the Constitution? Because it wasn't included in the Constitution in the first place. In the first states, the 13 colonies wouldn't ratify the Constitution until they put something in there for the people. The Bill of Rights were an afterthought. The founding fathers only cared about their money. It's the same thing that Buffett was doing here in 2008. Understand your history. Understand what's really going on. Don't put your head in the freaking dirt and listen to everybody else. Do your own research. Do your own due diligence to really understand what is actually going on. I am not a conspiracy theorist. Not at all. I can go into a conspiracy theory, sure, but there's no point. What I'm talking about is facts. How do you know about the Bill of Rights? Because they were amendments. They weren't included in the original document. So if the founding fathers really cared, they would have been there. And they didn't put them in until the states came back and said, hey, we're not accepting this until the people are represented. We were an afterthought. Our forefathers were an afterthought for the good old, great United States of America and the founding fathers. All right, off my soapbox again, back to trading. Questions. Questions, comments, and concerns before I go into what I'm looking at as a potential fix. Just go ahead and put yes or no as you're typing so I know if I can move forward or not. Is anybody finding this of value? TikTok. Any of you finding any of this information of value, or am I just wasting my time? Any of you still here? You all are quiet. I don't have anything on here to tell me how many people are on because I don't really care to know, because I don't need anything else put me under pressure when I'm over here trading real time. All right, well, there's nobody talking, so I'm going to go ahead and move on. And what am I moving on to? The potential fix. Okay, so how do we fix this? How do we put this into context of how do we put the game where it's more in our favor? How do we turn around and get ourselves so we can manage our positions as asset managers and not as traders? Enter around your trading plan 100%. If it goes against you, don't worry about the stop. Bring yourself out of the market when it gives you an opportunity to do it. Was I adding into positions when I was showing this when it was going up? No, I waited for the pullback. Waited for the pullback. Did I go all in for my entry point? No, because I need the inventory for the exits. Guys, look at this number right here. Look at this number right here. I want everybody to see this. All right? $4,215. Okay? I was up $3,500 trading the US session today, and I was up like $500 of that and before the market at like 8:30 because I saw something and I was like, you know what? Yeah, we should probably do something here. Okay? And just glanced and just there. All right. In that context of what's going on there, okay? $4,215 in one day. Now, Seed, you were in Discord. I was up 3,500, the extra 4,200. Did I show you that building real time, or did I just interest on Lehman fail? Lehman made some bad choices. Okay, so it's not a conspiracy. They made bad choices. Okay, what do we call ourselves? What do we call ourselves? Traders or asset managers? We call ourselves whatever we want to. It's your business. You are a business owner. Call yourself what you want to. Are you a CEO? Are you a president? Are you a trader? Are you an asset manager? What are you? You come up with your own title. Lehman and those individuals that fell made bad choices. They made the wrong call. And we had to go in and we had to fix it. But it was political that caused it. The cause was political, okay? The banks and financial institutions reacted to something that happened in 98. It's the Fair Credit Act, okay, in the United States. Banks had to give money to individuals that didn't want it, all right? And that they didn't want to give money to because they said it was discriminatory. Okay, beautiful. So now the banks have to give that money out. Well, those individuals that you're giving money out now have a higher rate of default on borrowing money than other classes. So now you have to manage the risk of those extra defaults because you have to give money to them set up by the government. So how do you do that? So you create the risk tranches. Some companies got greedy, like Lehman, Bear Stearns, on the third largest bank in the nation at that point in time, and also Washington Mutual. All four of them really got in trouble, and they're not around anymore. Why? Because they got heavy into the higher risk. They made those choices. The government had to bail them out, or we were going to go down. The financial system of the United States was going to fall, and everything is pegged to the US dollar. And the US dollar is not pegged by gold. The only thing that gives the dollar value is not gold. It's the taxing authority of the United States to tax their constituents. And Seed of Life is saying, yes, you did, my friend, in terms of talking in Discord and doing everything real time in my trades. That's a one lot, guys. $4,215 in one day in a one lot. And today wasn't a great day of trading. And over 2,500 of that was made in less than 15 minutes between 9:45 and 10 o'clock. Seed of Life. Is that true or is that false? True or false? T or F? He's the one that called it out. I didn't. Because I didn't even realize, really honestly, it was only 15 minutes at that point in time of the trading day, but I was up 2,500 between 9:45 and 10 o'clock today, trading the US session of the NASDAQ. We don't need size, not in the NASDAQ, not if we understand auction market theory. Now, granted, yesterday I was down $5,500, but why was I down $5,500? I was down $5,500 yesterday and from the trading of 2 days ago because I'm using a stop. Seed of Life, could you imagine if I was doing this asset allocation stuff on the day of yesterday that we demoed? Could you imagine? What do you think the results would have been? Heck of a lot better than $248, right? This is trading. This is what it means to trade. Setting a stop is not trading. Setting a stop is hoping and praying that your 2-to-1, your 3-to-1 risk reward ratio is going to hit so you can pass your evaluation and get funded and just wait for the day that you blow the account. Cedar Life is saying he witnessed it. We shouldn't be hoping and praying. We shouldn't be guessing. We shouldn't be giving the casino money when we can have our own edge. How do we create that edge? Here's my idea. I'm talking to these people. I'm seeing what I can't do and what I can't pull off. Okay? Company's named Blue Sky. Look what they're offering. Think of a profit goal of $20,000. It sounds really, really high. Okay? The drawdown is $5,000 static. Up 55, then 240. Yeah, exactly. But it'd be more like up 12,000 because I would have been adding size in those areas to do the inventory because of what the market was doing. So it'd been closer to a $10,000 a day doing it. We can set it up one day and check it out, but that's exactly what would happen. Guys, I've had days where I've been up $15,000 to $16,000 in one day in these markets with the volatility and the trends that we have going on. I've done this, and I've done it at live. I've done it in front of individuals, like people in my community. They've seen it. They can contest. They know. All right? I'm not blowing smoke here for you guys. I'm telling you what's going on and what we can do to do this. $20,000 profit goal of $5,000 static drawdown. What does a static drawdown mean? A static drawdown means that it's not a high water trailing mark. It means that it's $5,000. If you end the day with $25,000, you have a drawdown to $5,000. And it doesn't move intraday like the high water trailing mark does when you're in other prop accounts. This is a $300,000 static. When you go funded and you're still under evaluation, you're not an actual broker account yet, you have a $3,500 buffer target, you only need a 21% consistency, you have a $2,500 static drawdown. The issue with this is only 5 minis, but we have 50 micros. Okay, we have 50 micros. If you do micros instead of the minis and you can be up 4,000 in a day, you're only up 40. Okay, I get that. It's not enough. That's what this might be for. 2 minis, 20 micros, $200,000 static. We only need a profit goal of 6,000. But imagine if you don't take your expenses, what your revenue can be. Now, granted, I was trading at 75% accuracy. I think I had four trades, 3 revenue, 1 expense is all that I had. And then I had the 1 revenue, no expenses in the at 8:30 around then, and then anything else was just, they were also revenues. They didn't have any other expense in there at all anywhere. So I had like trading at almost 90% accuracy today. There's about 10 trades, 9 of them revenue, 1 expense. Okay? There's something here. Now I want to show you something. Especially when it comes to here. This is important. All right? We can go to a brokerage with these individuals after being funded, which very few other ones offer, and you aren't going to get there because you're sunk. What's the minimum balance of it? $1,000. It's going to be based upon how well you do in the funded and how well you do in the evaluation. Extra info, there's no profit caps and no payout caps. And 90% of the funds go to you. We can grow this account to whatever we need in order to be able to asset manage whatever we need to asset manage, so we take very little risk. And what's going to happen at some point in time, the market's going to shoot in such a way that we're not going to be able to we're not going to be able to compensate for the risk. We will take a $20,000 hit at some point in time and unfortunately blow up the account. That is the major risk to this idea. It can happen. But what we can do, though, is make sure that our position sizing, we can do position sizing algorithms. We can do other things that we need to know exactly where our max risk is and make sure we stay below it. And if we put our heads together, we work together, we bring individuals together that's able to put a plan together like this, that understand math, that understand the statistics, that understand this process. And we will find an answer that we can use someplace that gives us the room and the opportunity to do it. So Darren, so U.S. currency is correlated by oil to sell in the international market. That's why USD Japanese yen gone up after close of Strait of Hormuz. What's your opinion, sir? So yeah, the U.S. dollar is the oil is pegged to the U.S. dollar. You can make the argument that's a possibility that Saddam Hussein and Muammar Gaddafi from Libya and Iraq, both of them did possibly do oil deals in euros. I'm not saying that happened. That is a conspiracy theory, but it's interesting that they both died at almost the same time. That we went into Iraq even though they had nothing to do with Afghanistan in September 11th. Why did we do that at that time? There is evidence to suggest that that's what happened, but I don't know for a fact. I don't have that kind of proof. Okay? But it's a possibility. And if that's the case, yes, the US could lose a lot of business, because what happens with the US dollar being pegged to oil? Every single currency exchange has to be done in US dollars for every single purchase in oil. And there's a currency exchange for each one. Who picks up that currency exchange? Who picks up those extra dollars and every single oil transaction, and how much do you think that's worth, and who owns that? Look at the big picture, guys. Understand the big picture. You're certified, what, CFD? What is CFD? What is that certificate? Certified Financial... Is it financial or is it computers? I'm unsure what CFD is. Even more. I don't think it would have taken that long to cover. I have to agree with you. But do you guys see what I'm putting down here? What I'm looking at here? What I'm looking at putting together? Most individuals don't have the money necessary to do what I'm talking about. $300,000 static with a $5,000 drawdown is possible to do. $20,000 profit goal is pretty high, but it's absolutely 100% doable in a week or two. No cap profits, no payout caps. $5,000 static. It's enticing. And you can have up to 5 accounts. 5. The only thing I don't like about it is we're capped at 5 minis. I don't know if that's enough. I'm going to be doing a lot of work this weekend on this. I'm going to be doing a lot of back testing. I'm going to test the bejesus out of this to figure out if that's possible to do. I'm going to take the lowest points of a trend and see if we can't get out of it with only a 5 lot. We might have to go into micros to do it. I really don't want to do that, but it might have to be done in order to be able to make that happen. I don't know yet. But what I do know, though, is auction market theory. I'm not getting in to go short at a low because auction market theory isn't going to let me do that. I can go short at a high, but not at a low. Now, I can go short on a low of a bar. I'm talking about a low of a range. In other words, this. I'm not going to take a short down here. I'm not going to go long up here unless the market, where is it? It's right there. Unless the market, well, why isn't it drawing? Oh, because that was dumb. Sorry. I'm showing my lack of intelligence. It's not on there. So I can't do it on that chart. Maybe I can do it on this one. Yes. Okay. So I would go long here on a breakout, a pullback, and long. Where's the risk? If price action comes back down through here, and usually there's at least a pullback by VPOC and those type of things. And this is where you would start around the VPOC expecting a rotation. You would be looking for any sort of higher high or any high coming in an up bar, and that's where you start adding. So you can add as close to it as you possibly can. And by the time you do 5, are you dropping your entry enough to get out at a break even? Speed of life, I would agree 100% if someone could say I attracted what I'm living today. Because right now you are my testimony, haven't dwelled much to action. I'm so grateful right now. I can feel joy in me. Well, thank you. Thank you, Seed. I appreciate you. Sundaram, it required a different prop firm. What do you mean? What would require a different prop firm? I'm sorry, Sidera. I'm just not understanding your question. I'm not understanding the CFD. CFD is you can only trade on Forex market, not future. Okay. Now, okay, I see what you're saying. What country are you from, Sidaram? Because I thought about this too. Believe it or not, I thought about this, and I do have an answer. Okay, I do have an answer, and I will show you that answer in a second once I understand where you're from. Because I'm thinking about this. Everybody is in different countries. We're not all in the US. We don't all, follow the same rules and laws. I'm going to show you exactly, though, what we can do with some of these companies. And this is the first one that I found in this. And I saw this and I was like, man, and I've already sent them a message. I've got a couple emails out to them. I'm waiting for some responses back to them, okay, or back from them. But I am having some conversations with them. I want to talk to them. India. Okay, beautiful. I want to show you something. All right. Where is it? Let me find it again real quick. That's not it. I want to find it again. And I don't remember where I found it last night in my initial research. Give me a second. Give me a second. I think it was under payouts. And I don't want to just tell you. I want to show you on the screen so you can see it for yourself so you don't have to take my word for anything. This isn't about me telling you, what's possible and you just have to believe me. I really want to show you guys all of this and so you can see what it is that I'm trying to do here. Okay, let's go to FAQ real quick. Let's see. About payouts. Here we go. Here we go. Payouts. Daily payout process. No minimum. Where's it at? Here we go. Taxes. You will be paid as an individual contractor by 1099. If you need a 1099 for your LLC, you must select Gusto as your payout method. Rise will not issue LLC 1099s. Rise is a clearing firm. It's your responsibility to choose correctly. And what's a clearing firm? They're the ones that hold the money. Brokerages can't hold your money anymore because of what happened with that brokerage firm. Wasn't E-Trade, but it was one of those like that. It was the company that stole basically all the money of the futures. They were running a Ponzi scheme. The owner was running a Ponzi scheme of the funds. When you put money into a futures account, they're supposed to be segregated from the fund, from the brokerage account itself, from the firm's account. Well, they somehow was able to stop that segregation, and they got access to all the funds, and they used the funds. Guys in prison, all sorts of stuff. Now you have to use a clearing firm. Non-U.S. citizens must submit a W-8 bin on their first payout. No reports are sent for non-U.S. citizens. You need to get a W-8 bin. And here's a list. Hold on. This is not, you don't need an LLC. It means you do have to pay U.S. taxes on the money that you make. W-8 bin certificate of foreign status of beneficial owner for United States tax withholding reporting is used by non-U.S. individuals to certify their foreign status and, if eligible, claim reduced U.S. withholding rates under U.S. tax treaty. The U.S. has over 65 signed tax treaties with countries around the world, and any country with an active treaty can potentially use W-8 bin to reduce or eliminate the default 30% withholding rate on certain U.S. source income. Who uses it? The countries: Canada, United Kingdom, Germany, and these are the examples: Japan, France, Australia, Brazil, Mexico, South Korea, Singapore, Netherlands, Switzerland, Italy, Spain, Turkey, India, China. You're going to have to talk to a tax authority in your country. But all you need is a W-8 bin. You don't need a visa. You don't need to be in the U.S. You don't need to be a U.S. citizen. You don't need to apply for anything other than to fill out the IRS form W-8 bin. And be part of one of the 65 countries. Do you guys picking up what I'm putting down? Do you see the work I'm putting into this and the bigger picture that I see? And eventually what I really see is going through and doing what I did with individuals with demonstrations, really teach you to trade and not tell you, hey, I can make you a trader. Demonstrate to you over time that I can trade, that I can do this. Demonstrate to you that you can do it. Okay? That you can do it, that you can do this. Train you. Then I make a prop firm. And we trade together. Speed. Come on, Tony. Sindarum, yes, sir, absolutely. I'm sure you guys are saying that in terms of me saying, do you guys see the big picture? That I'm thinking about this. I'm not thinking about this as me. I'm thinking about this as a trader community. I am so freaking tired of going on to TikTok, going on to YouTube and listening to these morons out there. And I'm sorry. I shouldn't call anybody names, and I am not questioning their integrity or anything that they're doing, but I'm telling you, they don't know anything about the markets, and they're taking money from people that don't know better. And I'm not trying to say that, hey, look, you know what, I'm all altruistic and I'm just this great person and blah, 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 blah. No, I'm a freaking American. I'm a capitalist. I like money too. but I really do want to help people. And you're just going to have to take my word for that over time. That's not something that I can just show you. You've got to see it over time. And you take the amount of time that you need in order to be able to see that. And if you do see it, I want to keep a space, a seat for you in this process. I don't know how the big picture is going to unfold. I don't know what's going to happen. I don't have it. Well, I have a crystal ball, but you know what? The batteries are dead and I can't find batteries for it. So if anybody knows where to find batteries for a crystal ball, please let me know. Okay. I got the crystal ball. We can see the future that way. It'd be great. Like minds attract like minds. And I want to attract a good group of people that I can actually teach how to trade, and we can work together. And if we're going to do asset management, well, guess what? We all kind of specialize in different asset classes. And now we do a commodity pool. It's possible. It's more than possible. And the world has opened it up so we could. I couldn't do this in 2010 because it was still, illegal to do what other people are doing on TikTok and YouTube now. That all opened up in 2020 with the whole GameStop and all of that stuff and the traders coming in. There were so many people doing it that they couldn't call it insider trading anymore. They had to be more relaxed on the rules and the regulations to it. Those individuals that were doing the whole thing with GameStop, they should be in prison. They completely manipulated that whole process and got individuals in to jump in and just, a lot of people got hurt. Some people made a lot of money, but a lot of people got hurt. And that's not what I'm looking at doing here. Everything would be completely done in your own individual accounts with your own individual taxes, with your own individual everything. But the whole key, though, is first, you've got to be confident in your trading. And another thing that I don't like about the trading community right now is they're talking about, don't go in sim. It's not even worth it. If you have the wherewithal to be honest with yourself in the trades, sim is the best place for you until you have at least 30 trades. Why 30 trades? 30 instances of action is statistically relevant. You can start getting your idea of your expectancy, of your percentage of profitability, and you've gotten at least hopefully enough days where you have some range days, some trend days, so you know what to see and how well your system performs in different market conditions at the live edge, not at a static and not at a back test. Why not at a back test? Because even if you're doing it live, you still know what those days were. It's still in your subconscious mind. You remember some things. You remember some things, and it still clouds your judgment. It's not 100% true. The only time it's 100% true is if you can accurately, where you enter a trade and you don't just go in with 10 lots saying, oh yeah, and then, oh wow, look at this. I'm up $25,000 today because I hit 10 lots. You're lying to yourself. You got to be honest. If you want to work with a group, you've got to be honest. Everybody has to be honest, and you got to trust the honesty of another person. And if you're doing stuff like that, you can't be trusted. You can't even trust yourself. And you can't trust your methodology. Sim is great for that process. To test your methodology, to test yourself. Because you can still get pressure even in Sim. And if you can't trust your signals, you can't trust your methodology, you can't trust your money management, you can't trust those things, as soon as you go live, you're going to have a lack of confidence, and you're not going to have clarity, and you're going to be all over the place, and no matter what account you get, you're going to blow it up. Questions, comments, concerns, ideas, please share them with me. If you don't want to do it here at the live right now, that's fine. Come over to Discord. Live the return. Come over to Discord and let me know what your questions are. Leave a comment on this video. Talk to me. Let's have a conversation. You have ideas of what it is that I'm talking about, how we can put this together? Let's talk. The possibilities are there. We just have to find the right key to unlock the door of the possibility aligned to what we're looking at doing. That's it. And that's living intentionally, what I demonstrate in the Human Performance Lab. You guys just think that I'm just full of a bunch of crap? Please say so. Put a C. Spam a C right now if you think I'm full of a bunch of crap. And I just don't know what I'm talking about. Well, at least I don't have a bunch of C's. I guess that's kind of a good thing, right? Even if there's only two people on, I have no idea. It's funny though. But seriously, it's possible. And I don't know how it's all going to play out. And I still have to be able to perform at the live edge. And if you see my numbers right now, they're on sim 100%. Why are they on sim right now? Because I'm trying to do this live. I'm trying to entertain. I'm trying to teach. I got a lot of hats on at the same time. And it was live a couple days ago. And I was just like, ugh, I lost it. Sidarim, sir, you're amazing. Thank you. I appreciate you. Appreciate the compliment. It was too much for me to handle, so I went back to sim. And once I can do the sim for a few days and have that confidence, I'll have the clarity that I'm going to be able to go back live again. But I would love when I go back live to find a place like this that works for international people just as well as it does Americans. And we can start doing something that hopefully allows us to put on the hat of asset management rather than relying on trading retail stops. Designed to create losses, not designed to allow inventory, to manage space, to allow you to manage an account properly. Questions, comments, concerns, anything. Don't make me say Bueller. Don't make me do it. Anybody have any other questions? Anything that they want to go over? Anything that they want to see? Do you guys want to learn a little about auction market theory right now? Or are you guys pretty much ears are leaking and you're going to just want to digest this information and we'll have another conversation again next week when it's time to do another live? Talk to me. I'm here to help you guys. Use me as a resource. Don't just stay silent. Let me talk to myself. I'm here to do whatever it is I possibly can to help you guys get to where you want to go because I wish somebody like me was there for 30 years ago, 33 years ago, because I literally spent over $120,000 trying to learn how to trade over different gurus and indicators and trading psychologists, performance coaches. And I finally gave a guy named Camden Ward 10,000 British pound, which at the time was like 12,000, just under $12,500. And he taught me auction market theory in 2014, and I didn't look back. See, I would like to challenge you, but I'm overwhelmed with what I'm absorbing. Well, challenge accepted. I'll give you a rain check on that, all right? So here's a challenge card for you. Take me up on it later on when you're not overwhelmed. Bueller, Bueller, anybody? So yeah, I will talk to these individuals the first beginning of this next week. The platform that I would use this on would be Rhythmic. Of course, you can use, you know what? They have Deep Chart. I want, because that's what I use. I use Deep Chart. I know there's a lot of people on the internet that talk about Deep Chart and stuff, and like, oh, it's whatever. It's simple to use. It gives me all the information that I need, and it's not like Sierra Charts, which I have. You need an engineering degree for, and it hasn't crashed for me. So I don't know. I don't have any problems with it whatsoever. Sundaram, sir, how prop firm get $1 billion valuation? I don't understand. How does a prop firm get $1 billion valuation? So what prop firm do you know of that has $1 billion valuation? Or are you just taking that because I used $1 billion as an example? I honestly don't know the valuations of prop firms. What I was thinking of is like hedge funds, $1 billion hedge funds. BlackRock comes to mind, well over $1 billion. BlackRock doesn't necessarily have a prop firm, but they have their hands in all sorts of stuff all around the world. I do know back in 2018, 2019, somewhere right around in there, Top Step was making $45,000 to $50,000 a month when they first got started, like in their first year. And they weren't even doing payouts for evaluation passes. So after you do the evaluation pass, you would get a funded account, and it was actually a funded account. It wasn't, just another mock account that any gains at that point are paid out by the monthly subscriptions that they're getting. Now, at one point in time, I do know that they were actually like, I do know at one point in time that they had over $500,000 a month in just revenue from selling those things. Funding Pips, 1.5 billion valuation. I'm not sure. Dubai-based proprietary trading firm Funding Pips does not have a publicly disclosed valuation. However, tracking data shows they boast over 1,200 employees and millions of monthly site traffic while having raised undisclosed venture capital from New GX Capital. There you go. There's your answer right there. How do they have a valuation of 1.5 billion if that's the case? It's from the venture capital. And then, of course, there's some good traders out there, guys. There's not just, snake oil salesmen out there in different various places on the internet. There are good traders out there. You don't find them. You don't find them. I'm here because I almost died in 2023. All right. And I decided that I was going to that gave me the urgency to get out of my depressed state that I was in from my divorce in 2020, and I decided to venture back out into the world. And venturing back out into the world, I really wanted to help individuals with performance. Well, just achieving their goals in life and just like regular self-help stuff. And it's like, oh my God, now I'm getting into self-help. What in the hell am I doing? Well, in April of this year, I hadn't looked at a chart in 6 years. Guys, I've only been looking at charts again since April of this year. And I was out of trading for 2020 for actually November of 2019 was the last time I looked at a chart until April of this year. It's been 6 years. And I'm already back in the swing of it. I mean, it's like night and day to me. I'm also trading a heck of a lot better than I ever have. And it's not because of the market condition. I've been in market conditions like this in trending markets. It's not it. Give me a balanced ranged market and I will do a heck of a lot better on that day than I will do on any trend day. Love ranged days. Oh my God, threaten me with a good time. But I really, really, really want to see people live their intention and an intentional life. That's what I want. Call me altruistic, call me whatever you want to in that context. That's what I want to do. And to do that, I I didn't know how to do that. I was trying to figure it out, and I was trying to do all this other things, and it wasn't until I got back into trading I was like, okay, you know what? This might be possible to do. And then I saw all these individuals out there and, these guys trading from Sky Rises and Dallas and different things along those lines and showing the glitz and the glam and, trying to show a lifestyle and selling, these top step, or not top step, but these funded accounts, and they're making more money off of the sales of the funded accounts by having 5, 6, 800 people in their chat rooms than they are, actually trading and watching them blow up accounts and make mistakes and do other things. These guys don't know what they're doing, and they're I see what they're doing, and I'm not going to I'm not going to badmouth anybody because I don't think what they're doing is wrong. But I want to do the opposite. I don't want to be another one of those individuals out there. And that's why I'm demonstrating this stuff live at the live edge. This is why yesterday I took from 2 p.m. until 7 p.m. yesterday to teach an individual how to do what I do, or teach them what I do from the top down. Wait, or from the and then from the down top. I mean, I showed them everything from the way I do my pre-market analysis to the way that I trade to how you can see the auction and footprints no different than you can see the auction in profiles. It's all the same. So Darren, sir, your gift to people like me. Thanks, sir. Long live, better live. The one thing that we all have in common, we were all born. So I guess that's something in common. So I guess it wouldn't be the one thing, but one thing we do have in common is none of us are going to get out of life alive. None of us. And we don't know when that time is going to end. But having a near-death experience, I'm able to turn around and say, okay, yeah, you know what? I have some urgency here. And definitely not because, I have an experience from that near-death experience in terms of, a light or something along those lines. I don't have any fun stories like that, so I apologize. But it's the clarity. It's the urgency. And what does Andrew Huberman say about changing the neuroplasticity in our brains, the patterns, the predictive nature of our brains? To mark your brain for change, you need focus and urgency. Well, what's focus? Well, whatever you're focused on right now, that's going to drive action. What's urgency? The fact that you need to drive that action right now in this moment, not yesterday, not thinking that you're going to do it tomorrow or an hour from now, right now. If you need to plan it out for an hour from now, well, then you need the urgency to do it then. Not, oh, well, I'm tired and I'm going to go grab something to eat, grab a beer, go sit down at the TV and sit down on the couch and watch some TV. That's not urgency. Urgency is you're going to back what you said you're going to do with action. And when you take that action, new wires start to span from the marked place that needs to be changed in the brain. And then when you're done with the action, you sleep. And the sleep is what starts to put that new wire into the other wires in that neuroplastic wire itself. It's what softens the plastic, if you will, around the wires that make them amiable to allow a new wire to come in. And before we're the age of 25, it's the environment can do that for us. The brain is malleable and will change based off of environmental information. But when we are around 25, it's like the brain is like, okay, well, I don't need any more information to predict any more of the future. So I'm going to stop allowing the environment to adjust me. And now it's going to take focus, urgency, and action to cause a change. But what creates the focus? Not the neuroplasticity. Why? Because it comes online before conscious participation does, which means that the neuroplastic programming is in the present moment, already acting before conscious participation or conscious focus even comes online. And then you wonder why you don't take the action. And then because you are the neuroplastic programming, because it's identity, and that identity is predicting your future behavior, you're turning around and now blaming yourself because you are that programming, and you can't get yourself to do what you want to do because the programming triggers first, and it doesn't care about what you want. It cares about future prediction, not what you want. And you care about what you want because you want to bring it into your life. And you can't because the programs are acting before you're able to bring it into your life. And you don't even realize it until afterwards. Oh, I was supposed to do that. Oh man, why did I do that again? I said I wasn't going to say that. And sure enough, I said it anyhow. That other person that I said I wasn't ever going to find again, I found one just like them because it's patterns. And we need to stop the patterns. So we stop the patterns by conscious participation, by focus. And that's what I demonstrate in this process. I have people talking to me in here. What is this? Okay, good. That, my friends, is the Human Performance Lab. This is what it means to live the return. What is the return? Returning to conscious participation. So we can utilize focus and urgency to mark our brains for the action that we do so it can create a new wire and we can start operating from that new wire. What's that new wire? A new habit. We don't break the old habits. We don't change the old habits. Sleep does that for us. We need to mark the brain. And what is focus? What do you want? What is your intention? Then what's your urgency? What's your meaning to do it right now? Because when you have those two, you're going to automatically act. Think about it. Think about a trip that you've ever wanted to go on. You plan it out. You have everything ready. You're packed. You're ready to go. You don't not go. You go. I'm dedicating my time to return. Is that what you said, Seed? I love it. You don't think about not going. You don't think about doing those other things. You go because it's time to go on vacation because you're looking forward to it and it's time to go. And so you go. It's the same thing. Same exact thing. Well, I don't see any questions. I don't see anything else going on. I don't want to just sit here and ramble about nothing. You guys know my plan. You know what I'm looking for. You know what it is that I'm trying to do. You have a taste of asset management, which is not something that you've probably seen before. At least nobody was saying that they were. Somebody says, C-Round, love it. Somebody got a couple people following me because we're doing the demonstration of the asset management, right? The asset management stuff is very, very real, and it can reduce a lot of the overall expenses. And if we can find a place that allows us to do that, because these other prop firms out there that are doing these trailing stops are not there because they like us. They're not there to help us. They're there to take our money because the system is rigged against us. And they're going to make a heck of a lot more money than they're ever going to pay out, because very few people can do that consistently. And nobody's actually doing that consistently, because what I understand is individuals blow their funded accounts all the time. Sure, get funded, and then you blow the funded. And then you're right back to paying them anyhow. And even if you do get funded, you're still paying them a percentage, so they're still making that as well. And then you have their affiliate program, and you get more people in because you get them to see, the benefits of the funded accounts, and here we go. It's a racket. Sundaram, no sir, a lot of experience coming in lesson I like to apply in my life. Let's do it. Stop talking about it and let's do it. Join me 9 a.m. Join me at 9:40 a.m. every morning. Let me demonstrate action. Watch me get performance anxiety and those type of things. Watch me work through it. That's the whole point of this. Because even though you start putting new wires into the neuroplasticity, the wires that are in it, they never go away. We don't change the old habits. And let me give you an example. Think about an addict. Everybody has an idea of some addict in their life of something, some addiction, right? And we have all heard stories or know somebody that's had 30 years of sobriety, or 30 years of freedom from their addiction, right? Well, not freedom. They'll call it something else. I can't even think of what it's called right now, but 30 years of sobriety or whatever. Their addiction isn't prevalent in their life. And after 30 years, they have a relapse. Well, you tell me how an individual can practice new habits over a 30-year period and then all of a sudden have a relapse. If we can change, heal, delete, get rid of an old habit. And that's what the return is about. It's not about changing our habits. It's about changing our brains so we can be in the moment, so we can practice conscious participation in our life in the moments that matter the most. And when the performance comes in and shifts us to old ways of thinking, which shifts our perception to old ways of seeing, which shifts our actions to old ways of doing that are not aligned to our intention, we realize what's going on. We don't blame ourselves for it because we realize that that's not our identity. So we don't blame ourselves for it. We realize that we're in the bleachers watching that portion of us on the court playing our life out for us like they're the athlete on the field. And we, conscious participation, get on the court and start acting in our life, impacting it in a meaningful way. And then returning when we realize that we're in the bleachers and not on the court. So we can return to conscious participation and align our actions to whatever it is that we want to achieve in our lives. Because your achievements, they matter. They matter to you. They matter to the world. Think about it. Wouldn't the world be a lot better place if everybody was moving towards their achievements rather than living a stuck life, upset that they can't do the things that they want to do? Wouldn't the life look better, or the world look better, if more people were doing just that? That's about all I have for today. It's 2 minutes to 4. I will stick around for the next 2 minutes to see if there's any comments or questions. If you're interested, I'll be on all weekend. I'll be around all weekend. Join Discord at Live the Return. Come join me, put a thing in there saying, hey, what's going on? Can you help me with something? Can you show me this? Can you show me what you're doing in the context of trying to get a static drawdown? How are we putting this together? Have a conversation with me. Go into the general chat area of Discord and put whatever it is that you want in there. I will be here. We can converse. We can build this together because it's so much better with the community. Nobody likes to be alone. We're social creatures. Let's get a bunch of like-minded individuals together and let's pull those minds together and do something meaningful for the group, moving us into a community that's moving into an intention. How much fun would that be? And don't worry, there's no Kool-Aid. It's all good. Seed of life, it would be heaven on earth. I love it. Well, we're already conformed to the patterns of the world, right? Oh, good times, good times. Oh, religion. Oh, I love that people have religious beliefs. I love that people are spiritual. I don't like the judgments that people have when it comes to viewing other people of other religions. Why does our belief have to be right and somebody else's is wrong? Why can't we just accept that other beliefs exist and let people have them? Why do we have to be right? I don't know. I don't know. It just doesn't make a lot of sense to me. But it's the world we live in, and it's okay. It's 4:00. Thank you everybody for attending. Those that followed, thank you so much. Thank you so much for following. Thank you so much for liking the video. Thank you so much for subscribing. If you did find some benefit out of this video, please hit that like button. If you found a lot of benefit in this video and you'd like to see other material like this, subscribe. So that way you know when I bring out another video and you won't miss new content. And if you're feeling really generous, put a comment out there, even just a heart or an emoji or just saying hi, because it really helps small channels like mine get out there and distributed to other people that may need this information as well. And if you want to join the community, come on over. Come on over to Discord and let's have a conversation and figure this out together. Sadaram, sir, see you trading yesterday. A random pop-up in your channel. I blew up looking at your trading style. Enter, exit, then again enter on same setup after taking a stop on break. Even then, make profit. Well, yeah, I want to learn that style, sir. So let me show you something. Okay, Sadaram, let me just show you something. All right. This isn't crazy. This isn't weird. It's not magic. Okay. It's not science. It's an auction. And the auction exists everywhere. Okay. When you look at this profile chart, well, let's look at this one. Just make it simple. Okay. Can you see how you can say that this is kind of an auction itself? I mean, you can see the lows, you can see the highs, you can see where the majority of volume was traded. You can see where what areas the strongest volume was, where the weakest volume was in the day. You know, you can see areas of multiple distributions in a day. You can see where the auction accepted here, rejected, accepted some more here, rejected, accepted some more here. I mean, can you see that there's an auction here? Just yes or no? Can you see how you could get an idea that an auction is going on? How price action opens on a day, turns around, moves into acceptance of a prior day, rejects out of there, moves back into the balance of the current day, the developing profile, moves back into a high, moves back into balance again, and closes somewhere back into balance right around VPOC. Can you see how that is a facilitation of an auction? How this bar here, very low volume all over the place, opened and closed at its high, didn't trade around areas much, it stayed out of areas. No, sir, but low is buying, I guess. Okay. Um, how do I explain the auction process to you? Okay, let's go over here to this section of the chart. I don't know if you can see that from where you are, and I don't know if I can blow this up anymore. There we go. Let's just do that. Okay. And you can't see all of it, unfortunately, and I can't get the chart over to, yeah, I guess I can. There we go. This right here, what this is doing is it's a accumulation of the bars. Okay, it's accumulation of price. So every price that has traded in this range is showing up here from every single bar. Okay, and this is not price. This is volume. All right, and it's plotting volume over time. Time is the x-axis. Time is always the x-axis. You can have non-time as the x-axis, and that's more of a tick chart, okay? But anytime you have a time chart, you have time on the x-axis, and then you have, in this case, price over here on this chart, but here you have volume. So it's plotting volume over time. It's plotting price over time, okay? Where we see volume in these high areas here, okay? So there's a difference between, can you see that there is a difference between volume here and volume here? Is there a difference between volume here and volume here? Is there a difference between volume here and volume here? Can you see that? And if you can, what is the difference in those areas? In here, we have what's called a high volume node. In here, we have what's called a low volume node. It doesn't let me draw in there. So we have low volume here. We have high volume here. Okay. That means that price rotated, facilitated trade, spent time here in this area, and it spent less time in this area. Why? Because it takes time for volume to develop in areas. And time means rotation, means price action traded and facilitated price around these areas. It rejected more up here. It accepted more up here. It rejected more down here. What does that look like in terms of here? This is the same exact thing. This is facilitation of price. More price traded in this area here than in these areas up here. Do you agree? Rejection, acceptance, where price accepts volume, more volume trades in those areas. Give you another example. This one's going to be even better. And I called this sideways range today live. I didn't wait for it to develop and say, oh, well, there's chop. I saw this area happening over here. Seed. Am I wrong? Did I not do that today? I saw that actually over here when I built my plan in the first place. See, can you confirm that I did? That I called this consolidation zone well before it ever happened? And you look at this, you can see that price action, a lot of the bars traded in these areas. Look at the body. Now look over here, okay? Look over here at the volume. Where do you see the low volume nodes? Here. God bless it. I don't like this program in terms of drawing capabilities. Low volume here. What do you see in this area? This is the top of the area that I just drew just randomly. Rejection, rejection. What's rejection? Wicks. You go onto TikTok, you go onto YouTube, and you hear these traders and talking, oh, wow, look, there's just a lot of wicks. There's a lot of wicks. I mean, this is just chop. No, it's price action facilitating the auction in a particular area that you can determine beforehand. Don't tell me it's random wicks and you don't know what the market's doing. You only say chop when you don't know what's happening because you don't understand the auction. Speed of Life, you did a 2,000 winning trade. It took you out. Yes, exactly. I did. It's funny. Whatever. Wicks are areas of rejection. Price action didn't facilitate there. Price action facilitated in the bodies. Where's another area of low volume? Check this one out up here. What do we have up here? A bunch of wicks. Where is most of our volume traded at? Well, if we take this bar to this bar, the vast majority is here. Okay, this is where unfair lows and unfair highs happen. What does that mean? This is set up where 70% of all volume was traded in this area. That means that roughly 70%. So 15% traded up here and 15% traded down here. Okay, this is the pour I was asking you about. So we have 15% of this range, it's price action traded down here, 15% traded here, and 70% traded here. The market's facilitating action here. When you're looking at auction theory, this is what this is telling you in terms of what you can actually use, information you can actually use to trade off of. Oh, what did I do? I lost all my stuff. You know what? Now I'm just starting to get irritated. And it's nothing to do with the platform. This is total user. There we go. Sweet. Let's delete this. Let's delete all my boxes real quick. You're expecting the majority of rotation in these areas right here. And look at price. Look at where your wicks are. Most of your important wicks in terms of rejection and price rotation happen outside of this big yellow box, does it not? Yes, spam Y, if you agree that most of the major wicks of rejection that caused price to move to the other side happened outside of the yellow box. Yes or no? Y for yes, N for no. Because we need to understand, we need to see this concept and understand it before we can move on. I don't see any spams. I don't see any yeses or nos anywhere. Yes. Okay. Beautiful. See, thank you. No. Okay. Were you confused on that, Senderum? Are you looking at these wicks in here and you're seeing 1, 2, 3, 4 wicks, and yet they're still moving to the other side of value? Is that what you're seeing? How is it that you don't see the wick here, the wick here, the wick here is much more important than the wick here, than the wick here, than the wick here and here? When you're looking at the range, if you want to trade this range, you need to buy down here and sell down here to make money, right? If you sell down here and that you're in this range, is there a good chance or a bad chance that you're going to actually make money by the time the market moves and you get out with any form of slippage or anything along those lines? And the speed of the market of volatility. Okay, if you turn around and sell down here, are you going to lose money? You need to buy the high. You need to buy the lows and sell the highs, right? Sell the lows and buy the highs. You don't do that from this range here because price action's rotating too much and you get stopped out. You get stopped out way too much trading in this area. Let me try to give you another example so you can see. Look at this example. Put our little profile on. I won't even use a box. We're going to use the breakout as I would use it, not include that bar because of the breakout. If you try to trade in this area right here, just the yellow boxes, and you try to trade in this box, do you think you're going to make money? Oh, you're just confused in numbers. Yeah, don't look at the numbers. Here, in fact, you know what? I'll make it very easy. Oops, wrong one. Don't look at the numbers. No numbers. Not yet. Candles. If you're trying to trade in here, do you think you're going to make money or do you think you're going to lose money? Isn't this the chop that people talk about? Isn't this the top that the chop that they're going to get in or out of, and this is what kills their accounts? Well, let me show you something. If you take the yellow line off and you come in here and you look in your unfair lows and you look in your unfair highs where price didn't trade a lot of time around, and you look for low volume nodes, you look for low volume nodes, and you say, all I want to do is go short up here. All I want to do is go long down here. If you went long off of these areas, if you went of this area, because I only have one, but let's go ahead and add some more. If you had a methodology designed for you to go long down here and to go short up here, do you think it's possible, just possible, if you're in, near, or around one of your marked areas, that you could actually make money in this range if you stayed consistent to a rule set that only allowed you to get in around these areas? And you think your profitability percentage would be higher if you got in off of these ranged areas comparatively to this area? And by the way, guys, I went long on this bar. This is the bar, one of the bars that I went long. I'm not saying, hey, look at me, look at how good I am, right? I didn't try to short this here. I went long. There's a reason for it. I can show you guys later, but not right now because I'm trying to go through this whole process. But this is a good reason in here to be long. And I was like, look, stay out of this, stay out of this, stay out of this. I kept on talking to everybody in the chat room and in Discord to stay out of this market condition. And then this broke out here and I'm like, okay, I'm long. And I showed everybody my chart and I was long. Sundaram, are you confused about your buy areas and your sell areas? Now, why do we get these low volume nodes? Because look, price action didn't spend a lot of time here. Price action spent a heck of a lot more time in this area right here than it ever thought about spending down here. Do you agree? If you agree with that, price action ranging, spending time in an area is acceptance of an auction. They are facilitating price in this area. They're rejecting price in these areas. The amount of time that price spends in an area is the acceptance of the auction. The less time you spend in an area is the rejection of the auction. We don't want to be in the acceptance of auction because that's where you get chopped up. We want to be in the rejection of auction because that's where we can have the best opportunity to buy low and sell high, because we can anticipate where price is going to go to facilitate trade to the opposite side of the auction. Why? Because we're trading in a range. And when we're trading in a range, we should expect price action to come up, test unfair highs, to see if the market will facilitate higher highs. No, it doesn't. Price action comes down until you find buyers willing to accept prices to higher highs. Once it accepts buyers, it continues to go up until price action turns around and attracts sellers. And then here, at this point, price action stopped facilitating trade in the auction by making a higher high in the auction itself. We came into unfair lows, but we did not test where sellers were previously at. We did not test lower lows. Price action facilitated higher because buyers stepped in at higher prices. Yes, we learn. So, Sudhir, yes, sir. We learn on smart money concept or in ICT after breakout of a candle, we have to enter in small pullback, not before happening a breakout. Right? Exactly. Yes, a pullback. Why? Because ICT doesn't help you understand momentum. Breakouts work really well when there's momentum. And if you can anticipate when momentum is coming in, you can anticipate an entry on the breakout without a pullback. So you scalp the breakout, you re-enter on the pullback. And now you have two entries. Two, not one, two in the same position. First one, on the breakout. Why? We break higher with a facilitation of buyers supporting in volume. This is telling us volume, these little blue dots. Buy volume in these areas at higher price, expect momentum to continue. Price action comes back on a retrace. ICT, you're using fib retracements, right? A 0.33, a 0.68, the fib numbers, Fibonacci, the patterns, right? Oh no, facilitate the auction and expect pullback in this area because you're anticipating price action to come back into what? The high volume area to facilitate trade, not an area based upon some number that some guy made up that may or may not work. And what do? You go long again on the pullback. You saw the momentum because of volume. You get out on the scalp and the pullback in an area where you know you can have a new entry and it facilitates trade in there. You now have a new reason to buy the market all over again for another scalp. And I did both of these live. Yeah, exactly. I know what ICT is. Those are the guys that I make fun of all the time. You're welcome. It's not that I'm making fun of you by any stretch of the imagination. The methodology is off. It's why you blow up accounts. It works good when the market is testing areas of balance and it's breaking out of those areas of balance. Where it fails is not being able to see the participation of active buyers and sellers in areas when the breakout, let me show you. When the breakout of the range fails to go to lower prices. Now, this is a bad example because it's a breakout of a wick, okay? And then what it also does too is it fails because what happens if the pullback is too far? What happens if the pullback isn't far enough? It's an arbitrary number. It is called mathematics, institutional levels. Yes, but do you think the market cares about mathematics, or do you think the market cares about auction? It is called mathematics, and I don't make fun of it in that way by any stretch of the imagination. But do you really think the market absolutely cares about your mathematics? Is this auction based upon mathematics, or is this auction based upon auction and participation and facilitation of traders and their actions? Because the facilitation of action, the facilitation of price itself based upon an action, if it's anything but a market, could you even make it mathematical? Statistical, sure. Statistical probability, but not mathematical fact. Mathematical fact, 2 plus 2 equals 4. And you're trying to say Fibonacci is 1, a retracement is 2, 1 plus 2 is 3, and it's a mathematical institutional level. No, it's not, because the institutions are not using those levels. The reason why it works sometimes is because it facilitates equally with the actual volume and the participants of the auction. I am not making fun of you or your methodology, but your methodology is not aligned to the markets if you're using mathematical institutional levels that the institutions aren't even using in the first place. That's the lie. It's an auction. You pull back into the auction. It's an auction. It's an auction. Here, buyers and sellers conversing. It is a pullback. It is an expectation of sellers stepping in. It's an expectation or understanding that rejection. Sellers are in here at the lows. Why are we making an equal low or just a one tick low? I went long on this bar as well today, not because of mathematics, because we have trapped sellers beneath us. What do you want to know? A mathematical number? Or do you want to know where there's trapped sellers? Which one's going to make you more profitable over time? And I'm not making fun of you. I'm not questioning your intelligence, and I'm not doing anything else. ICT is just another form of technical analysis, and technical analysis breaks over time. Why? Because it's not facilitated by the auction. It's not supported by the auction. 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 You want to see something really cool? Auction. Auction. Pull back to auction. I don't need a mathematical institutional number to tell me where I'm anticipating an auction to take place and a possible pullback, to see sellers and possible rejection coming in of why I should be out of the long position instead of looking for a 1-to-1 or a 2-to-1 risk reward ratio based upon numbers that have no meaning other than where I arbitrarily entered, and then I call it mathematical institutional numbers. I call it a false pseudoscience. And I'm not going to use false pseudoscience to dictate what I'm going to do in the future with finances. Not going to happen. Why? Because I spent 20 years trying to figure out how to make that work. And this is why people utilizing ICT blow up accounts, because they're told it's mathematical institutional numbers that institutions are using because they don't understand, one, an auction, and two, auction principles. Look at that pullback directly into where sellers once got aggressive after buyers got aggressive that couldn't even push price higher into a higher high. I call it what? I don't remember what I said. I don't remember what I called it. It was, I don't know. We'll have to review the tape. It'll be recorded. ICT is going to be so mad at me, and I don't even care. And this wouldn't even be a fib number. There's no way you could even call this for a possible short based upon fib, but the auction tells you buyers and sellers aggressive near the same exact prices. Sellers come in, facilitate price to a lower low, rejects right back to the auction. Price tries to come back up above the auction where sellers once were, couldn't do it, rejected, came down, closed, and a doji bar, a little bit of indecision. Buyers stepped in, couldn't even make a higher high, closed at a lower low. If you're not short here, I don't know what's wrong with you. Then price action turns around, comes back into where buyers were once aggressive, rejects once again, gets below the area and the close of that bar itself. You should be adding into the position. Price action facilitates trade down here, possibilities of buyers coming into the market, and you can't even make a higher high. You can't even get above where buyers were once aggressive. Buyers aren't there. They're dried up, or they would be making higher highs because they were willing to purchase it and buy it here. They should be willing to buy it again, and they're nowhere to be found. If buyers aren't facilitating price higher, what's going to happen? Price action has to drop to find where buyers will or are willing to facilitate trade. Nowhere in here. That's why price drops, not because of an ICT institutional number. Mathematics has nothing to do with it. And where does price action pull back to? The ICT number of probably 60% retracement. Price action comes right back to a prior facilitated trading area below prior value, and price action can't even facilitate higher. Where does it go to? It tests the sellers that are strong in here, pulls back directly to the area. Buyers try to get above where the sellers were strong, rejects, get back below. A buyer comes in here and is trapped. What does price action do? It comes back down again, rejects, tests back where sellers once were, tests the auction that's over here, expand that number back. You're trading in another range. Price action gets back below where the buyers were in, below where the auction is. Sellers are now in, pulls back directly back to the previous auction, turns around, facilitates trade higher. Now you should be looking long. Price action comes back again where the buyers were once strong, where the sellers were once strong. Back into this area, rejects, buyers get aggressive, higher highs. You use your mathematics. I'll use my understanding of auction. We'll see who's up more at the end of a week. Let's go. Bets on. Uh-oh. Where's your fib numbers on this rejection of auction? That facilitated trade lower that you can get in as soon as this bar comes back below here. And if you really want to put a stop in, this is where you're wrong. And your facilitated trades, can you put a stop in that close from your edge? based upon your pullbacks. We didn't pull back up in here. So if you're short, you got to be short someplace in here. Whereas from the pullback itself, maybe up here. Where is your stop at? Your stop is going to be up here so you can manage a 2-to-1 trade. But the trade isn't wrong until it comes up here and breaks this high, because this is where we can always come back and test to see if buyers are willing to break the high of the start of the move. Could you get a 2-to-1 trade off of this? 100%. But I can get a 4-to-1 trade by entering up here. And I can re-enter again if I do get stopped out on this pullback here, because I have sellers in the bar. Look, facilitated trade. I see rejection right here, and I called it in the market, in the room today. Rejection at the low. You're still holding on to your trade, trying to get your 2-to-1 or whatever, wondering where you're going to get stopped out at your mathematical numbers. I am not challenging your intelligence. I'm trying to undo years of unorthodox training in you that needs to be untrained. Because there's a lie there, and a lie that you were told, and unfortunately you believe, that institutions are using your numbers. Institutions are using these areas. What are these areas here? The same iceberg orders that they use to time themselves into the markets off of their time and sales. Facilitates trade. Buyers and sellers communicating at the high. Price action barely breaks that high. Price action comes back down again. We try to get back down to where the sellers are. Price action cannot facilitate below the sellers. Why? Because sellers aren't selling down here. Where is price going to go? It has to go up to see where sellers are willing to participate in trade again. Buyers come in at the high. Price action's testing that high. We can't get down. If price doesn't come down and break these lows, we're going to break these highs. Fib numbers can't tell you that. Are you picking up what I'm putting down, Sidaram? There's nothing wrong with your fib numbers. There's something wrong with the ideology that they're institutional numbers, that institutions use. That's the problem that I have. That's the lie. That's why I get so worked up about this. Not because you're using it. I don't care what you do as a trader. But if you're going to sit there and say that's an institutional number and it has meaning because institutions are using it, no, they're not. I can guarantee you that 100%. No, they're not. And I'm trying to save you from that ideology. Yes, sir, absolutely. Good. Good. I'm grateful that you don't feel like I'm challenging you as a person, that I'm not challenging your intelligence. I'm challenging the false belief that you believe in. And then when you turn around and you put the numbers back on into this context, you see the sellers. You can see these lows. Look at this, 68.41 coming into this low here of buyers, right? Okay. Look at the sellers, 74.37.48. We have over 100 sellers here. And you're telling me that over 100 sellers, when at the most there was only 54 or 74 over here, we have over 200 here. We only have 111 here. Only 200 sellers were only able to drop price by one tick below the low, when you have an additional 100 sellers over here than over here. Oh no. 100 sellers should at least be dropping price down here into this area, maybe even down into here. That's absorption. Buyers absorbing price. Buyers absorbing sellers. 28.96, not 80 is pushing price up when we only had 13.48 and 64 buyers. Then we get above 102 and there's another 101 buyers there. Price action doesn't come down and test down in here where you would see a fib number. No, it comes right in where sellers were, and immediately we get buyer response. And we can't even get below the area where strong sellers were. Buyers absorbing the selling, price action facilitates higher prices. Tests again higher prices, momentum. Tests the momentum. The buyers in here can't even get down where the sellers were here. Price action moves higher in momentum. A trapped buyer comes in. Price action can't even retrace to the buyer. Seller comes in down below. Price action facilitates trade to the seller here in a pullback. There's your short as soon as the bar crosses its open. Why? Because your buyers are in control above this open. Sellers become in control of this bar when it's closed, below its open. Sellers become in control of the bar below its open. Why? Because above its open, it's an up bar. It's a test. Wait until the bar gets below the open, creates a down bar short, expecting continued facilitation of trade. Price action comes back on a pullback to test these buyers, not on some fib number that's up here that it doesn't even get to, where the buyers are here, and continues lower. A seller at the low, possible trapped seller. What do we need to see? Price action facilitate trade maybe back up here, but we're anticipating a lower low. If not, we're going to facilitate higher. What happens? Another lower low. More sellers expect a lower low. Doji bar in here, test, can't make a higher high. This is confusion right here, but you should be expecting a lower low. There's no buyers. Sure enough, what do? Test the seller in here. Breaks a little bit, no more buyers. There's another entry to the short side. Get back through the sellers again. You're continuing lower. You're expecting lower until you get this. And if you got stopped out here on a loss, you don't know what you're doing. So your ideology is so different than anyone else in this space so far in my research. Absolutely. Yes. Do you know why it's so different? I'll show you why. Remember how we saw the auction and the higher time frames in volume? Do you remember that? Yes or no? I'm going to show you the power of this ideology, and it's not my system. It's auction market theory. I did not come up with it. I didn't perfect it. I didn't do anything else. I just follow it. I listen to it. And this is why I listen to it. I'm going to show you right now why I listen to it. Because price action facilitates the auction of longer time frames. Price action facilitates auction in lower time frames exactly the same way. Low volume, testing of high volume, rotating between high volume, rotations between high volume and high volume until price action facilitates trade higher and momentum comes in to take the market higher, until price action trades lower, takes momentum lower, until we start trading and facilitating trade between the high volumes all over again. We test the high volume in here. We come back and test the high volume in here. It's just facilitating trade. It's all it's doing. That's it. No more. And it trades between it. And we break out of ranges and we move back into ranges to refacilitate trade. Where is trade facilitating at here? Trade's facilitating in here. Where does price action trade around? The facilitation of these areas, of these high volumes, over and over and over again. Because this is no different than a long-term chart. You just have more bars, the same auction. Why don't people do this? Because they think it's hard, because it's not an indication. It's something that you have to be able to see and something you have to understand, not something that you're able to put some indicator on like this, draw it here and say, okay, this is where I want to enter from, and that mathematical number makes perfect sense. I'm going to enter on that number, and I'm looking for my 2-to-1 risk-reward ratio. This is simple. This takes time to learn, and people want simple because they want to make their money now. But what they don't realize, though, is that simple doesn't make them money long term. Understanding does. What you do in the long-term charts is the same thing that you do in the short-term charts, because all it's about is facilitating trade. Markets constantly looking for participants in both the buy and the sell side. When one of them dries up, it moves in the opposite direction until participants enter the opposite direction. And then it moves into a range until it decides that buyers are strong enough to break out of an area, and that's where we have momentum. And if you're scalping, you need momentum. And if you can't understand where momentum is going to come in and out of, you're going to get trapped in areas of chop. Do you ever get trapped in areas of chop in your style of trading? I can too at times, 100%. But at least I have the wherewithal to define where chop can exist even before it gets there. What does this red box mean? It means no trades. And I called this, which is the same equivalence of this exact range here, where a lot of people got chopped out of today because you have fib extensions through here all over the place. And I kept myself out of this area completely because I predefined it. Why did I predefine it? I predefined it because of this. Check this out. You have unfair lows on a static profile from yesterday. You have unfair highs from a static profile, and the value area low shifted, right? So at the time it was here. This is dynamic. It changes throughout the day. This is static. The unfair lows and the unfair highs of this developing profile coexisted here. The market's telling you to go left and to go right all at the same time. And what do you need to do when somebody's in your car and somebody's like, go left, go right, go right? What do? You freeze. You don't know what to do. There's no clarity. You have no idea. Stop. And the red box is designed to get you to stop so you don't trade in that area, because it's telling us there's possible confusion in the market because it doesn't know if it wants to go up or if it wants to go down. What happens when you get confusion in the market? You get a tight range of chop. Oh, it's chop, and we got wicks all over the place. Who knows what's going on? I listen to this from the ICT guys all the time. These are the people I listen to. And then it's like, oh, wait. There's momentum. Whoa. What just happened? I can't believe what just happened to that bar. I mean, man, that has to be manipulation or something. We tested a freaking auction. Price action unable to go below there. Individuals realizing this on the institutional level, and they're buying in their own personal accounts. Drop the freaking mic and call it a day. And that's when I go in my own head as I listen to them. I'm like, man, guy, you have no idea what you're talking about. None. Because you don't even understand what you're looking at. And that's why I decided to come out of the woodworks. That's why I decided to come out of retirement. And that's why I'm here now talking to you guys, because I'm tired of everybody listening to these individuals and leading you all astray into beliefs of these mathematical numbers are magical because institutions are using them. Oh, irritates the bejesus out of me. And then you're getting people into prop firms and prop accounts doing that because, oh yeah, look, you can get funded. Oh, and look, I'm making so much more money off of these than I am my funded accounts, but I'm not telling you that. The prop firm I showed you today, be 100 transparency with you. The reason I did email them today, you know why I emailed them? I'm going to show you the exact email that I sent them that I haven't gotten information from yet. This is what I sent them. Okay? Wait a second. It's not from this account. Oh, rude. Rude. Hold on a second. I'm going to need to add an account real quick so I can show you this. I want to be 100% transparent with you guys. 100%. There's no questions. I'm not coming in here and saying one thing and then I'm turning around and doing another. I want you guys to see what it is that I'm doing and why I'm doing it and truly understand. Okay, you know what? We're going to do it a different way. I'm not going to use Outlook. We're going to go to Google. I forget that I can do that. We're going to go into, okay, yeah, good. I'm already logged into this one. Beautiful. So now we're going to affiliate question. Here we go. We've already received an answer. You guys are going to see this real time. Here's the emails that I sent to them. I'm going to read this to you because you might not see it. Okay? But I'm going to read it to you. Good morning. I am a new content creator and I just signed up for your affiliate program. Yes, I signed up for their affiliate program. And we'll be starting your $300,000 static propel evaluation next week. Just told you guys I was planning on doing that. I wanted to see if you ever provide giveaways for your evaluation or if I can purchase evaluation and use them as giveaways. Thank you for your time and consideration. Am I asking for percentage of payout on affiliates? Am I asking for information for me? What am I asking for there in that email? What am I asking for? You tell me. I am a new content creator and just signed up for your affiliate program and we'll be starting your 300,000 static propel evaluation next week. I wanted to see if you ever provide giveaways for your evaluation or if I can purchase evaluation and use them as giveaways. I'm even asking them if I can use my own money to purchase evaluations to give them away. My own money. If they don't provide it, what's their response? I'm out of office today. I'll reach out to you on Monday. That's what this means to me. That's where my heart is, and that's where my mind is. Because somebody came over yesterday and asked me, hey, do a giveaway. And the first thing I did said, hey, if I go to your area, can I do a giveaway? And if you're not going to give me funds to give away, can I turn around and purchase one and give it away? Sir ICT claims everything his own creation. He have 20 plus model and most famous 9:30 a.m. after open of market. Let market run previous day high or low. enter on fair value gap, stop loss 15 point, target 30 point. Yeah, I mean, it's a methodology, right? I mean, this tells you right here, bias is up. 48% of sessions in the last however many days has a single breakout. And this tells you that right there. 48% of the time on a single breakout, his methodology is going to work. I'm not, no, I'm not saying it doesn't work. I'm not saying that doesn't work. Okay? What I'm saying is, do you understand why it works? Do you understand why it works? Or are you just taking his methodology and applying it and saying it works? Do you know why it does? I will tell you exactly what happens. I'll show you exactly one of my trades that I took today live. Guess what? What's his IB? What's his initial balance range? Is it 15 minutes or 30 minutes? When he's doing that, because mine's 15 minutes. I don't care about the 30 minutes because I don't want to wait for 30 minutes. I'm a little bit more impatient than that, so I use 15. That's the only reason why I use 15. Be completely honest with you. It's just an impatience thing. It's my own personality as a trader. I don't want to wait 30 minutes after the market opens. My mentor told me to. I chose not to listen to him too. So I probably won't listen to you either, and that's okay. Because I'm an Aries and I could be freaking stubborn sometimes. Has nothing to do with being an Aries, but you know what I mean. Yes, sir, because of auction price theory. What, you think that it breaks out because of auction market theory? Okay, wait a second. Sir ICT claims everything his own creation. Yes. 9:30 a.m. after open of market, let market run previous day high or low, enter on fair value gap, stop loss 15 point, target 30 point. Yes. Okay. Because what you're doing is, and it's not based off of the auction. Okay. This is what's happening. This is what you're saying is happening. Okay. Or what he's saying to do. Go to the previous day. Okay, so after open of market, let market run previous day high or low. Okay, here's the previous day high right here. Okay, the market opens here in the Asian session. And during the day, it closes up here. Okay, it didn't come back down here. So you don't have a trade that day. But where's the auction at? The auction is a double distribution. You have a distribution up here. You have a distribution down here. You have low volume in here. Price action comes into the double distribution, comes back above this area here in unfair lows at the low of the day. I don't care about the high of the previous day or the low of the previous day. Price action is coming back and facilitating trade at volume point of control, the most volume and the lowest distribution, and an upward trending market condition. Sellers reject. Price action is going to continue to go up until sellers get strong in the market. Where does price action go to? All the way up to these highs. And your little ICT thing has absolutely nothing to do with the auction at all. Nothing. It's a mathematical number, and that mathematical number is not incorrect. You can make money off of it, but you sure in the hell don't know why it's working. Why is it working? Because you break the high. Oh, great. You break the high in a pullback and this market's coming down. You're screwed that day. You hit your stop. Here, you can make money if it pulled back. But why? This is an imbalanced distribution day. There's no volume forming anywhere. Look at how much volume formed here in this width. Look at how much formed here. Not nearly as much. That's an imbalanced day higher. Anticipate the high to be tested or the unfair highs here, and the market's going to continue up. I don't need a breakout of the high to realize that. He found an edge. He found an edge. And I'm grateful that he found an edge in his perception. It's awesome. I'm proud of him because a lot of people can't do that. But he probably doesn't even know why it works other than institutional mathematical numbers. And why are you using that phrase? Because you can't explain it any other way and you can't prove it otherwise because nobody really knows what the mathematical institutional numbers are. You really think that they're going to put those out there for somebody to learn if they existed in the first place? I've seen the screens of the people in the institutions. You say fib numbers and they're going to look at you like, what are you talking about? They're not even going to have a clue what you're talking about. You bring retail terminology, ICT terminology into an individual working for an institution. They're going to look at you like, I have no idea what you're talking about. I don't know. And you're going to think that they don't know anything about trading. Did you know that institutions have a buy side and a sell side, and individuals work the buy side and the sell side only? Why? Because it's more hands-on, like bedside manners than it is execution in the market. Why? Because you have individuals calling up with sad stories, crying because somebody just died and they need access to their funds. That individual's talking through that process, and they're trying to figure out how they're going to provide money into their accounts without turning around and adding negative equity into the account, into the investment account by getting out of assets. That's what you're doing. Seed of life. I told myself I'll forget everything I learned so I can grasp new information from day one. Nothing I learned previously worked for me. I only do the auction market theory. I only do it today because it's the only thing that worked for me too. Over time. There's periods of time where the stochastic oscillator and MACD crossover and, a 21 and 7-day moving average turned around and freaking popped in, or a pullback from, fibs or whatever. Yeah, they work over time and in specialized market conditions, but they don't work all the time. Because the market shifts market conditions and indicators and methodologies were built to work in a particular particular market condition. And when the market condition moves into an area that's not favorable for that methodology, the methodology breaks. That's why there's no consistency in it. You can't, if you break the auction, you break the market. The only way I don't know what's going on in the market is if you break the freaking auction. And if you break the auction, the market doesn't even exist in the first place. Now, does that mean that every day is profitable? Does that mean that every day I make money? Does that mean that every day I'm able to read the auction properly? No, not at all. But that's not an issue with the market. That's not an issue with the auction. That's not an issue with my methodology. That means that I need to learn better the auction process and those market conditions. The responsibility is on my onus. You look at the ICT individuals and they say, oh, wow, the only reason why my stop got hit there was because of manipulation. It was a stop run. They came after me. Because this little move right here to create this low, oh my God, guys, that's a stop run. They manipulated the market right there to make this little tiny low to stop all of those individuals out so they could turn around and make all the money in the long position. Is that how the market works? Is there that little inventory in the market? Anybody can be long down here that wants to be long, because price action is designed to facilitate trade. That's why you have high volume areas, to facilitate trade, not run stops. Understand the auction and then come and talk to me. And then if you can prove that something works better than the auction, I'll listen to you and your ideology. Just make sure you do it in my lifetime, and good luck. God, I sound arrogant when I say that shit and pompous, and I'm really not trying to be. I'm trying to get my point across. An auction market theory is a theory. What do you do with theories? You bring them to a lab and you demonstrate them and you test them to make the theory better based upon experience. What is experience? No different than an experiment. You don't see the ICT guys doing that. Why? So how would you even go about doing that in the first place with that methodology? I don't even know. They try to, and they spend most of their time talking about, oh, wow, if you do this evaluation and this number, then you can do this and this and this and this, and then you can clone your trades. You need to have these accounts because that's where they're making their money. That's how they got their high rises in Dallas, not because of their consistent trading. Watch them long enough and you'll see. Listen to them talk about the markets and you'll know. Just trying to save you guys years of heartache. It was, for me, trading was not easy at all. But it became a lot of fun when I learned the auction market. All right. Anything else? Any other questions? Any other points? Anything else I need to belabor on? Jeez. You know, and the ICT guys, I bet they mean well. I bet they're really trying. You know, I bet they really believe in what it is that they're doing. But, man, don't give people false hope by defining something that you can't necessarily define it yourself by saying it's institutional mathematical numbers that the institutions use. Sorry, that hurts me. Watch, I'll get a cease and desist order from the ICT guys in the next week. Oh, it's good times. C&D letter. Attorneys involved. Be good times. These are my opinions, only my opinions. Come and watch me and make your own determination. That's what it really boils down to. We'll see. We'll see who blows up accounts and who doesn't when it's all said and done. The main problem with retail trading and what makes it so difficult is we rely on stops. Asset managers don't have to do that because they got millions of dollars that they can turn around and use inventory to get themselves out of positions. You know, you could be down $10,000 and you can put 50 contracts in a heartbeat and bring price up above where your entry point is, or right at where price currently is, and immediately get out if you need to. And if you have the inventory available, you can do it in a heartbeat, and anybody can. There's no stop. There's no loss. There's no expense. There's no anything else. You're strictly using inventory to get yourself out of the position. And they have enough money to do that. They don't need stops. What hurts the retail trader? The stop. And then the prop firms use that against them. And then they turn around and say it's the institutions doing to us. It's the institutions coming after us. It's the smart money. Smart money is just another definition that you use because you don't understand the market condition, the way the market moves. You increase your understanding and you start to decrease the conspiracy theories, because that's what those are. And I'm not saying that manipulation doesn't happen. It's just not as prevalent as I think it is. Does TradingView have some features like deep charts? You know what? Let's take a look. I'm not all that familiar with TradingView to see what they have available. I don't believe that they have a lot of the auction market theory stuff. I mean, I used to have to pay $250 a month for software to be able to use auction market theory. It used to be extremely expensive because not a lot of people were in that space when I started learning it, but then it became more prevalent and people are starting to use it more. Just not enough people. Let's see. Let's look at TradingView market profile. Let's just say what they have available. So they have a time price opportunity indicator. This is very similar to volume profile, except for this is a TPO, time price opportunity. So it's not using volume, it's still using price and time. Yes, sir, absolutely. Little understanding at how people sell us live for years. It's hard to come out. But sir, we also store a chart in TradingView for hours and hours and find a good setup. No, absolutely. And you can. Yes. Okay. Sundaram, I'm not questioning, I'm not challenging you, but I am going to ask you a question. Are you consistently profitable in your trading? Are you consistently profitable? Can you show green more often than you show red? Can you show the consistency in your trading that turns around and shows that your methodology is viable over a 3-month period? Can you show that? Can you show that to me? Are you there? Because if you are, why are you here? Why are you here trying to learn something else if you're already profitable? Are you profitable over the last 3 months? Are you profitable over a week in your own trading? And I'm not asking you for numbers, and I'm not trying to get into any form of specifics. I'm asking you a question. Are you profitable? And yes, I've stared at many charts of various different time frames and various different things, hours upon hours, up to 12 to 14 hours a day, looking for and back testing particular setups and everything else that goes along with it. I have spent a lot of time doing that. It's one of the ways I can do it. Yes, sir, close 3 accounts in red. Go back to your methodology, go back to your institutional numbers. And what is it going to give you? It's going to continue to give you red. Question for you. Has your institutional numbers ever done something like this for you at a little over $2,000 in 15 minutes? Have you ever done that before on a one lot in the NASDAQ? Do you know anybody with your institutional numbers that has? Anybody? Have you ever seen them in one single trade do that? I haven't. They're always looking for a 1-to-1, and as they get a 1-to-1, they're moving their stop to a break even, and they're looking for a 2-to-1, and when they hit it, they're all kinds of excited and like, yeah, I'm up $1,000 or I'm up $1,500, and yeah, I'm doing something. And then they're looking at it as like, okay, well, here's the key zone, here's the key bar, right? Here's the key bar. Well, maybe this key bar. Well, you know what? I'm just going to throw money at this and just kind of see what happens. Oh, it's a loss. That's okay. It was an evaluation anyhow. I just go ahead and just do another one. Listen to the people that are following your ICT. Watch them. What are they actually doing and what are they actually saying? And how often do they stay in red or green? How often do they start back into the evaluation because they blow up their prop account? How many of them are making money off of affiliates comparatively to their own trading? Is this sim? 100%. Am I saying it's real? No. But if you're trading in a prop account, it's not real either because you're not in a funded account from a brokerage account. So your orders still are not participating in the market. It's still sim. It's all the same. It's no different. The only difference is here I'm not in a simulated funded account that I can pull $2,500 out of today. It's just sitting there at $4,215. But am I in the red today? Nope, I am not. I am very green today. I was down $5,500 yesterday in a demo, and I still turned around was green $258. How many individuals do you know with ICT in a particular day that can continue trading and come across and be profitable after you're down $5,500? And you closed 3 accounts in red, and you're trying to tell me that ICT is good or has merit. Mm. I just have to question the logic in that. Not you, the perception that's creating that logic. And this is why it's so difficult sometimes to work with retail traders because we can get so stuck in an ideology. And yeah, I'm the same way because I'm talking about auction market theory, but I can at least demonstrate the validity of my theory. And I'm not even saying I'm right. And I'm not even saying I have good setups. I'm saying I follow a theory that's backed by an auction, not mathematics, not statistics, auction market theory of understanding an auction, not understanding a price level and not even understanding why that price level even matters. What does a 0.38 fib mean? What does a 0.688 fib mean? What do those numbers actually mean? What are they saying? And how do they have mathematical relevance in an auction that's designed to facilitate trade? I don't know. Call me crazy. I'm crazy. It's all good. Anything else I can do for anybody today? Anything else that I can help answer for questions, concerns, anything along those lines? No, I marked my charts all up and I got to go back and delete everything later. I probably just won't save them. Well, no, I have to because by 30-minute chart, whatever. I need to create a whole new template for demonstrations and classes. That's what I need to do. And your performance, I commend you for being honest, Sundaram, about your performance. A lot of people called out like that would, you know, try to make up a story or do something along those lines. And I feel for you in the context of your 3 closed accounts in red. I'm just here to help you change that. And if you accept that or not, that's it. But I don't. It's I have no skin in the game for you. You've got to make that decision yourself. It just hurts me to hear that people defend an ideology and a trading idea that they don't know why it actually works. It's like having an indicator. Why do you have an indicator in your chart when you don't know exactly what it's doing or how lagging it is? And if you're only using price, have you ever noticed that sometimes price is leading over volume and sometimes volume is leading over price? Well, if you're only using price, what happens in the time when volume starts to lead? What do you do then? Nothing. You just still go off of price. But if you're in a pullback and volume is telling you that there's a possible correction or reversal in the market coming, but you're looking at a pullback and you get into that pullback in the opposite direction of what volume is telling you, price action is going to snap and snap hard. And now you're stopped out and you don't even know why, because now that's just a stop run. So maybe I need to just stop trying to save people from themselves and let them figure it out on their own and just reach out to the individuals that do want that help, because e- we're all free to do our own thing. You know, it's just, it's sad for me because I've been there on the other side, because I've bought indicators and I've bought methodologies expecting to see particular results. And a lot of times they turned into red accounts or break even. I didn't have prop accounts to utilize. I was a retail trader. I used cash. I used my own cash. I had accounts where I would take $15,000 and turn it into $63,000 in 5-6 weeks, sometimes with indicators of just working really good and just adding in size, starting with like 6 contracts and then moving to 12 and then moving to 18 as the value of the account goes up, and then to 25, and then having a drawdown and hitting my drawdown percentage and then going back to the charts and trying to figure it out. And now I'm down 20-30% from a high of the account. And I'm like, okay, well, it's not working in this market condition. I've got to build another method. And so now I'm not trading. I'm down 20% from the high. I still have plenty of money. So then I turn around and take 15,000 of what's left of the value and I start again. And usually when I start, it does really, really well. And then again, I'm up $50,000-$60,000 in a matter of a few weeks. And then it turns around and I have a drawdown and I hit my max drawdown of 20-30%, whatever it is for the methodology. And then I'm right back to where I was from ground one, trying to find another methodology that works. Until I hit auction market theory and that whole phase broke. The hardest part for me was to figure out how to trade trends. Because if you're facilitating trades and you're in a range, okay, how do you get into a trending market? I had no idea. And in April, when I started looking at people's charts, right, we were in a really strong trending condition. And I was like, you know what, I would go long there. And then I realized, oh my God, we're in a trend. I'm trading a trend. I can trade a trend now And I did that for about a month. And that's when I decided, okay, I need to test this theory. And I got my own charts. And that's when I realized I could trade a trend real time. And when I was able to do that, I could trade in a range, I could trade in a trend. And the only thing I haven't learned how to do yet is a market shift. And a market shift is that period of time of when we get a breakout. The breakout doesn't turn into a trend, so it's like a small breakout, right? See if we can find a good example of a small breakout. This might take some time, so it might not be worth looking at it. But you get a small breakout out of an area, price action doesn't start trending and it moves back into value again. Those are the ones, those market shifts, breakout, false breakout, back to value. Those ones are still hard for me to trade. But if a breakout pulls back, gives me a trend, or moves back into value, I'm good to go on that. That's not a problem. So I still have an area of my own trading that I have to get better in. I'm not a perfect trader by any stretch of the imagination. I make mistakes. There's still market conditions that are easier for me to trade than in others, but I hold my own. I've seen people, not even ICT guys, but other people on the internet, and I'll be up like $8,000 in a day, and they're down six, seven, $8,000, and it's like, man, the prop guys aren't, but other traders out there are. And I'm not naming any names. I'm not calling anybody out. I don't think that's right. I don't think that's necessary by any stretch of the imagination. I'm not here to talk down to anybody. I'm not here to question what anybody is doing. What I'm here to do is say, hey, look, if you're having issues with your own trading, this might help. And come check it out. Watch the demonstration as I do it live. Let's see here. Here we go. This right here. This is a perfect example of a false breakout, right? We have high volume here in this area. Price action turns around, immediately retraces from that area, starts to head down, and doesn't break below the low down here. Then we have another area of facilitation right here. We'll get back to that later. Price action turns around and comes up and comes back into this area again, and then it breaks out right here. Well, in the breakout, I'm anticipating a possible trend direction, but sometimes it breaks out, it pulls back here, and it just comes right back into value again. And then we'll trade around here for a little bit, and it's like, dang, what do you do, right? And so this one here would actually be profitable for me because it moved enough after the breakout, but then it fails. And when it fails, price action comes back down again. And now you have another facilitation of a auction through here, including this high up here. And it actually extends down to here and it pulls back right here. It's the same thing. It's the same pullback, but I want you to see something. We pull back to the high volume. We pull back to the high volume. Look where these wicks are for the most part. High volume, high volume, high volume, right? Breaks up, comes back down. Where does it go to? The high volume. And you can't tell me fibs work as well consistently. Auction, most current auction, price action comes down to, immediately breaks out after testing the other auction higher. So last question, how much we need confirmation to take a trade in auction market theory and manage risk and grow $5,000? Can scalp trade, convert, and position trading can be held for a couple days? 100%. 100%. Okay, so a scalp trade, right? Any entry in auction market theory can be turned into a day trade. Any day trade can be turned into a swing trade, and any swing trade can be turned into to a position trade, because you know where you're at in the auction on multiple time frames on any entry. Here, let me show you. Give me a random day, Monday through Friday, between March 31st and June 10th. Any day. Just give me a day. Random day that's not a holiday, then not a US holiday. Okay? I don't care what day it is. Just give me a day. And I'm only doing it during that time frame because I only have June June data saved for intraday data. So I have to stay within the June contract, or I could tell you any time. Just give me a time. I don't care. Give me a date. Any date. We're going to go through this. I'm going to trade a day for you randomly, and I'm going to show you exactly what it is that I'm talking about. Okay? It's going to be simple. Let's do it. That way you can see for yourself the answer. I'm not giving you an answer. You can see it. And then you can see the confirmation that I use for a trade. I'll talk to you about everything that's happening in the market at all times, because the market's moving. I'm not wondering what it's doing. Just don't do a couple days ago for an option like the 24th, because I already did that yesterday for Seed of Life. So don't pick the 24th of June, but that's outside of the date range of the 10th anyhow. Here's a calendar. Here's June. Any month. I don't care. Between March 31st and June 10th. Do you want me to pick a date? Do you want me to just pick May 13th? I don't want to pick a date because this is my problem with picking a date, right? If I pick a date, then you can be like, oh, well, he already knew that day. He picked it because he'd already tested it. He already knew. That's why I'm having you just pick a random day. Takes all of the guesswork and all of the questions out of the equation. So we're not doing May 13th. That's not going to happen. We can't do May 22nd either because that was a holiday for the U.S. session. That was Memorial Day. I have a calendar up here. Just pick a day. Any day. If you want me to go into April, I'll do that and just pick a day in April. C, do you want to do it? You want to pick a day? Because it doesn't matter who picks a day. Somebody, just pick a day. Give me a date. April 23rd. Beautiful. April 23rd, Thursday. Done. So we're doing the 23rd of April, and we're setting this chart up when I first start in the morning at 9:40 a.m. We're going to select a symbol. We're going to go into CME. We're going to go into NASDAQ. We're going to hit select, and we're going to hit set. I love this. I could do this all day long. Threaten me with a good time. I love this. All right. So this is just this is just the replay manager. Okay. The only other thing that I have on my charts right now is the Deep Dome, but Deep Dome's not on. So you just see everything that I see right now. Okay. And now what's happening here? I don't see. Are we on the 23rd? I don't think so. Are we? I'm just going back. It's fine because I can't see future price action, right? What day is this? April 23rd. Yep. Okay, good. We're on April 23rd, but this is showing 10:58 a.m. So let's bring it back to 9:40, right? Because we want to trade the US Open at 9:40. Okay. So here's 9:40. Let's bring it back first to 8:30. And there's going to be, well, it won't show what I did though if I do that. So no, we're going to do 9:40. 9:40, I'm going to take a moment when it first starts. And I'm going to build my pre-market analysis like I always do. And I'm going to show you how I build my pre-market analysis so you can see all of my analysis and what I'm doing all at the same time, so there's no guesswork. Okay, I don't have anything else that I'm looking at. There's nothing behind the curtain. There's nothing else. This is 100% authentic, and you're just able to see everything. And why isn't it going to 940 on April 23rd? I might have to restart the platform. Give me a second here. Because it's not behaving in terms of setting up to the proper date. We're still on April 23rd at 9:40 a.m., right? Everybody sees that? Everybody agrees? It's not lying. I'm not changing the date and saying that's what it was. Okay, but good. Here we go. 9:40. Okay. I'm waiting for my chart to build out here. Okay. Let's see. Here we go. This is going to be fun. Oh man. All right. All right. This is what we're doing here. Got my volume profiles over here. I've got this volume profile over here, which is good. I'm going to bring this chart over so you can see exactly what it is that I am doing. Okay. So the first thing I can see on a longer time frame, this is all a daily perspective of volume profile. Let me get everything back together again because I moved it all. This is daily perspective of volume profiles. And this is what we're currently doing. We're trading in an imbalanced market condition higher, so trend higher, and we're finding balance here at the highs. We're now in a range, and price action is starting to decrease. So I'm anticipating a little bit of possible lack of momentum. We can see momentum coming into the markets below value area low and value area high. If we pop out of those areas, we have an inside bar here today. An inside bar means that price action couldn't facilitate trade out of the outside of this previous range at all, which means that buyers and sellers are not participating at the highs or the lows. Okay, that means that the market is starting to coil and we could see a potential breakout. So this could be a trend continuation day. Don't know that for sure, but that's what I'm thinking about. We're either going to continue the coil and be in a range or look for a breakout to the upside. That would be my anticipation, not a bias, an anticipation. Okay. Now, what are we seeing over here? We're seeing exactly kind of the same thing, but a little bit of a different perspective. What is this chart? This chart is this is a US session only. So what we saw on the other chart was overnight sessions, Asian and London all wrapped up into one with the US, where this is the US only. And here is our current developing profile. This is at 9:40, so this is 10 minutes into the market condition. What we have here is a nice little range. Rude. What we have developing here is a nice little range. I'm going to take these profiles and I'm going to move them into one because they're pretty much trading within the current range. Now what I can do is I can say unfair highs here. I can say unfair lows here. I can say, damn it. And I can turn around, I can say unfair high lows here. I can say unfair highs here. Not a lot of unfair highs, but a little tiny bit of a ledge. And then I can say here is an area that I don't want to do business because price action is facilitating two different directions in this little area. So now I have my red box, and if price comes into that area, I'm not interested at all. Price action is currently trading in an imbalanced market condition higher in a current balanced market condition. Why a balanced market condition? Because we have a high volume within value, high volume within value. This still is a single distribution as well. Now we have a double distribution. This is showing possible trend continuation. This is showing more of value, but we're in an imbalanced market condition and we can break out higher. There we go. Now I'm going to go to this chart, and this is the chart that I get a little funky with. And I can see this area of balance here. I need to go back a little bit farther because there's the high. So this high, I need to index. I need to know where that high is. It's equivalent to that high there, which is perfect. That's fine. We're going to put this line here. We're going to blow this back up. I need this right here. I need this bar. This is my key bar. This is the most important bar. This is the bar that indexes my discretionary area of balance. This becomes my key and core area that I am going to work off of. And I have rejection possibilities here. I have rejection possibilities here. I have rejection possibilities here. And now I turn around and I make all of these red, because these are the places where I'm willing to facilitate trades on the short side. Not long up here yet, short. Am I willing to go long from up here? 100%, but only in certain conditions will I do that. So then we have this one that needs to be red as well. There we go. Now what do I have? Now I have unfair lows that I have to see. I've got this one. I've got this one. Now, mind you, I am not looking at any price right now. I'm only looking at my unfair lows. Okay. So now I can turn around. Well, I'm looking at my low volume nodes beneath value. That's all I'm doing. I'm not looking at price yet. I'm not looking how price actions traded around these areas. I'm not looking at anything else. I am strictly looking at only the low volume. No additional analysis is going into this at the moment. I'm not putting any thought into this. This is very simple, very easy. Now I'm going to collapse this chart a little bit. I'm going to go back down here to this chart. I'm going to say 26,800 and 27,097 are kind of important for me. So I'm going to go with the lowest one first because I can't keep this open and have you guys see everything. So we're going to go down here to the 26,800 area. Is that right? 26,800, yes. So 26,800 is right here in this area. My areas to go long on this chart here are actually higher than anything here, okay? So what I'm going to do is say, all right, this is what I am looking for. And then let's look at the upper area too. Where are we at in the upper area? Let me get this real quick. I need to index this. This is taking me a little bit longer because I have to move things around for you guys. 27098. So 2,700 right here, okay? That's at, almost at VPOC is where it's at. And my value area high is all the way up here. That's where I'd be looking short from that other time frame. So since shorts are way below me, if price action comes up into this area, comes back down, comes back up into these areas, anything above here, I'm now thinking as a potential long. If we get up into these areas up here, okay, I'm actually going to give this market a little bit of time, and I want to be short from these areas here. So this one here is definitely going to be on the short side. This one here is definitely going to be on the short side. Well, do I want to? No, not there. No. I don't. And I'll show you why here in a second. I want this one deleted. This one here, I need to delete this because I drew those same ones twice on accident. That's what confused me. Here, here, here. Same area, different scenario. What's the difference in the scenarios? The difference in the scenarios is this is a higher high. So this is just rejecting out of here. You know, if we reject out of this area, I'm going to be willing to take a short there for a scalp. Okay. If we came up here, we come down and we pull back, I'm going to be willing to, and we pull back into that same area, I'm willing to go short there. Now, if we come down and we come up, we go up and we break through this area and we come back down and we test this area, I'm going to be willing now to go makes it so difficult when I have to move things around all the time. Long. Now, here's my unfair lows in here. See how we have this little range of value and we have another one right here? I want to be very, very, very careful with this area because I can get chopped up in this area. This area is kind of the same, but look, see how we have the wicks and the lows in here? Where here we have much more of the bodies, the candle bodies in here. So this one here, if we come down here, I am willing to go long off of this area. If we continue down to the other side, right down here, we have a good rejection here. We have rejection here, but we have trading through here. We have trading through here. We have trading through here. So I'm going to look at this type of scenario here. And I'm going to be careful out of this area. I'm not going to put a circle here, but I'm going to know that area is there. If I see an opportunity that just stands out to me in the short time frame charts, I will be willing to take a long position from there. But my shorts are going to be a little bit of a different story. Why? Because off of here, I have this area and I don't want to be in around here. So I don't really want to go short until we hit around the 857 area, which is right down here, kind of where I just drew this line. So if I come down here and I pull back into this area and I start to drop, this is around that 57, I need to be short through here, right? And then if I really want to get jiggy with it, I can turn around and say, okay, what I want to do is I want to be below 657 for short. Damn it, I can't type. I can. I'm just not typing very well. And there it is right there. Now, when I bring this chart down like this, boom, there's my pre-market analysis. That's it. It's that simple. It's already done. And I talked through the whole thing the whole time. And how long did it take me? Anybody timing me? Anybody look? Anybody care? There's a pre-market analysis. That's when I'm looking for my day. I want to be short in this area, long up in here, long down in here, and short down in here, and price actions trading really close to the highs. Perfect. And here's my current initial balance. Let's play. So as you can tell, I'm still at one time, right? Haven't moved anything. Still on the same date of April 23rd, and we're at 9:40 a.m. We're going to wait for the next 5 minutes, so I don't trade until 9:45. Price actions trading at initial balance, okay? On the high, we have a bar that closed at its high. We have sellers down below, all right, that we already tested and moved above. but we don't have any auctions or anything else right now to the higher side. I'm actually anticipating at this point in time for these highs to possibly break and we turn into a possible trending market condition. Now, if that's the case, when we break these highs, when we start to hold, I'm going to be very leery on the shorts that I put in here. See, that's the whole thing about auction market theory. The auction market if the auction starts to tell you it's doing something else, you don't have to take your positions in here because you're not just trading areas. You know why you're trading those areas and why you need to facilitate trade in particular areas or participate in a particular direction and why you don't want to participate in that direction in other cases. So you've got to wait, let the market give you time, right? See where the bars are closing. Not just a close, not just a random thing. Where are they closing in relation to the open? Where are they closing in relationship to the high? Where's your high volume at? What's actually going on in price action? And I don't have a lot of high volume here to talk about, so I'm just waiting because nothing is telling me anything. And I'm still anticipating a potential balanced day because we have an inside and we're in a imbalanced market condition trending higher, which we can trend higher, but everything right now is telling me that the market doesn't know exactly what it wants to do right now. So I need to give it a little bit of time to tell me what it's doing. And the short time frame, we're in an imbalanced market condition higher. Okay. So we're already trending higher in the shorter time frame. What does that mean? That means in order for me to be able to take a short, I've got to see the trend end in the shorter time frame because we're already imbalanced higher. I don't want to take a short from a higher time frame if this lower time frame is telling me we're trending in the opposite direction. That would be dumb because now I'm trying to go short when it's long. This is multiple time frame analysis, something that most people don't do. But why do you want multiple time frame analysis? Because short time frames will go in and out of trends, even though you're in balance in these conditions. You're in balance in here, but you're trending over here. It gives you context, especially when you're in your areas, because if the trend is no longer trending, and you're expecting rejection in a longer time frame, but the trend ends over here, chances are the market is rejecting on the shorter time frame, and now you're moving in the direction of your longer time frame. This is where you can utilize and say, okay, I'm going to target low volume nodes or the value area low coming off the value area high. I'm not going to take this as a scalp. I'm actually going to take a day trade, and I'm going to target excuse me, I'm going to target 950 areas instead of trying to scalp out of the 27,000 areas. So 26,950 instead of the 27,050 or whatever it is, 27,000 even. So I'm looking for 150 points on a directional move instead of just looking for a scalp. Okay, price action closed at its high. Right at its high, but couldn't quite break. We're breaking now, and now we're seeing momentum. I'm still expecting a possible continuation to the upside in the context of this time frame, even though we're trading in my area where I'm looking for a potential short. And I have no high volume in here at all to go off of, which means that this here that's telling me this is retail traders in here. This is small traders in here. The big players are not in. The smart money is not coming into the market, right? So I need to wait until I start developing some sort of value in here before I can start taking positions because it's not telling me much information at all here. It's telling me not to participate because nobody else is participating but the retail traders. That's a circus. That's monkey hour. I don't want to go into the circus. There we go. Now we have a seller down here. Now wait a second. We have a larger seller down here, but look, it's only 29 contracts at a low off of a zero. Okay, so it's not high volume, it's just high volume based upon the low. We come down here to test it again, and we only have one extra seller coming in at the low. Only one. If price is facilitating to lower prices, we should see a heck of a lot more. Sellers should be willing to sell the low to facilitate price lower, just like it did. Now we have 48 and we have 24 and we have 69. We have 70, 68, and 27. Price action starting to facilitate trade a little bit more. This could be possible rejection out of my area up here, but I need time for this to develop because we have an outside bar which shows a level of momentum but it's non-directional, and I have nothing up top of me right now to tell me where I would expect to see buyer participation or rejection coming into the market. So I'm continuing to wait. It is currently 9:46. I can start taking trades, but I'm not interested yet. Not yet, because price action isn't telling me that it's time to trade yet, because this is where the market shifts can happen. If we get a close above this area, we could be in a trending day for this particular day because we're above initial balance high and we closed above it. If we stay within this range, we can turn around and be in a value day. We don't know. Buyers are stepping in here. I could go long here from this momentum of the buyers and anticipating higher prices, but I'm in an area of unfair highs. So it's too early for me to do that. Now I have buyers on top of buyers and stacked. Beautiful. Now I have a seller that's starting to get more aggressive. Now I have my first auction. Now I have a place to participate to possibly go short, all because I waited. Now we have buyers on top of buyers with sellers beneath them. This is looking like more of a rotational to the downside, but I can't answer that yet. I have to wait because there's not enough information. Now I have more sellers beneath me. Now I have rotation into this area, and I'm anticipating a rotation into this area. I'm anticipating value to happen here before, like a coil, before we break out to either the downside of value or the upside to go long. Do I sound like a person that has no clarity in the markets? Do I sound like a person that's wondering what's going on or what I'm going to do? Do I sound like a person that's confused or in a stressful state because of what the market's doing? Now we have buyers stacked up again. This is starting to look like the long side, but I'm anticipating a pullback down here to the higher volume to test sellers. Where are the sellers at in this market? Well, they're down here in the high volume on the offer side. We didn't break down through there. Okay, beautiful. We're going to see participation to the upside. I might as well go ahead and take a long position to the upside, and as soon as I do, an auction comes in, and I want to limit my risk as much as possible because now I'm not anticipating this to pop up anymore. I'm actually anticipating it to possibly come down. 450, we're testing the sellers, we're testing the buyers. I'm going to put my stop beneath the buyers. Why beneath the buyers? This should be support and this should be resistance. We're going to trade between the two in value before we break out. Testing the buyers, testing the sellers, coming back down, testing again. More sellers coming into the market now. We need to see price action come back down below here. We're probably going to see buyers step back in and test back up here. And if we don't see buyers break through this area, we're going to come down and stop. Why? Because sellers came back in after the auction. Now we're just in value. I'm down $300 for the day after taking a position for the upside out of momentum. Beautiful, not a problem. What am I expecting now? I'm expecting to see price action. I'd love to see this bar close around a low and another bar to come back up and test up here to this auction. Why? This is where buyers and sellers were talking in the first place. This is an area where now I'm looking for a possible short directly out of my area, directly in an area that I want to go short. The only reason why I went long was because initial balance. This is your little close above your initial balance, waiting for your pullback, blah, 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 to go long, right? I just went ahead and came up here looking for the momentum, and the momentum didn't happen, and that's okay, right? Did I wait for the pullback? No. Could have I waited for the pullback? Sure, but the way this bar closed, it was telling me that maybe it's not going to pull back. But I'm definitely not looking long now by any stretch of imagination because I have an auction up here that I'm anticipating is going to hold. So it's like you know what you're looking for, you're waiting. Absolutely. That's all I'm doing right now is just absolutely waiting. And I'm looking for this area to possibly go short. And I took a position that, whatever. I'm down $300. Ouch. Oh my God. No, I took a losing trade. Are you kidding me? Ugh. Where did the bar close? Pretty much in the bottom one third. Do I want to go short here? No, I'm waiting for a pullback. I'm being patient because I'm anticipating a pullback to come into this area and I'm expecting buyers to reject this area. Oh, wow. Sellers just got aggressive. God bless it. Oh, my goodness. I just missed a trade. I can't believe it went without me. It didn't pull back. I need a short. I need a short. I need a short. No. Wait. 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 Don't chase. Wait. This is the auction. It facilitated price right here at the high volume. Buyers defended. Okay? This is not the down move. Not at all. This is price action facilitating lower prices, telling us it should facilitate prices at a higher price. Sellers coming back strong again. We're still rotating. This is all part of the rotation. It's not the down move. Just wait. Just wait. Relax. Relax. We missed nothing. We have plenty of time. Plenty of time. And look, I have a plan for this. Price action comes back below this area back here, right? Can go short at lower prices. It's okay. Oh my goodness, we're just test where buyers were. Buyers aren't willing to buy any higher prices. Sellers came back and sold again where they were strong. I don't understand what this market's doing. I have no idea. You know what? They're just manipulating it. Can you believe this? This was just a stop run. Those guys, all these people going long up here, and they're just going to run these stops to get all of them out so they can run it right back up again. Man, this is all just manipulation. Can you believe it? Facilitating trade within an auction. And look at all the sellers. Look at all the sellers and price couldn't go down. Can't make a higher high either. No higher highs. None. Zero. Zilch. If market is not making a higher high, can you say that buyers are currently in the market? Do we want to be long here? Why do we want to be long at unfair highs in the first place where price has been rejecting, not accepting prices, rejecting the buys into lower prices? It's a nice slow market today. This is very easy to read. It's very nice. It's very everything else. Look at the buyers in here, 111, 112, 107. See all of these little sellers in here? These buyers in here? You can't get price to come up and break a high even though you have all of that? Okay, you know what? I'm going to go ahead and take my first position to the short side, and I'm going to turn around and give this room because I'm going to add into this position right here if I need to. I'm getting in here just in case if we break. We're in my area. Everything is looking good. I took a position to the long side. I got stopped out. I have a facilitation to trade above me. I'm risking $935 right now. I don't really care. And price action has already created a market shift and has failed and moving back into the direction of value. Okay. Do I want to take this on a day trade right now? No, because I'm not where I want to be and we can facilitate. So I'm going to go ahead and take this as a scalp right now because I don't want to hold on to it as a day trade because price action isn't telling me yet that it even has any idea what it wants to do yet because the auction is still facilitating trade at higher prices. So I want to be very careful on this position. I want to limit my risk because we can come down here and test these lows and not break them. So I want to be careful. And if price action comes back up into this area, I have reasons to get back in again if we're still rejecting higher prices. But right now, I'm expecting sellers to step in because price action buyers can't be in there. I mean, we could not make a higher high with all of this buying. In case we're up $200, we're still supporting here. I'm not really interested in moving my stop until we break these lows because I'm anticipating support to come in here. I don't want to lose my entry here because I probably won't get a better one if we turn around and just kind of facilitate in here. So I'm just going to chill and I'm going to wait. Am I up 200? Can I move my stop to basically a break even where I'm up $20 in case of slippage? I can still pretty much get out with a break even? Sure. I just don't feel like doing it right now. I don't know. I just like price action to the downside, and I want to give us a little bit of time. Oh no, we have a buyer in here and I'm short. I better get out. Wait, what's going on? Price action's going lower after buyer stepped in? What's happening? What is happening right now? Shouldn't we be going up? There's one little break of the low. We couldn't get lower. Look at the sellers here, 43, 48, 50 compared to the 59, 14, and 98. Less sellers, but we closed at the low. We came right back and tested where the buyers are, rejecting right now where the buyers are, testing where the sellers are, coming through, accepting lower prices, barely breaking them on lower volume. Upper volume now, we need to see the test. If we get above this little area here, I'm not interested in going short because we're actually rejecting lows right now. Now we get higher volume coming in again, but we still can't make lower lows yet. I want to be more defensive on my stop right now. Okay, now we broke the low. Now we have another seller in here. I'm going to go ahead and keep my stop here. I don't want to move it because I am anticipating price action now to at least come in below the 27,000 area. We're currently at 27,025. I'm going to give us a little bit more room. I'm not turning this into a day trade, but this is looking really, really good for me right now. And I'm at a break even right now. We're up $400 or $500. That's okay. I could start taking some scalps. If I start seeing, price action starting to reject maybe in this area, I'll get more defensive on my stop. But right now, I'm just going to go ahead and give this room because the auction is telling me I should probably give this room. Let's go ahead and extend this just so I have my area of support on here so I'm not turning around and looking at anything. We're going to extend that. Price action still facilitating trade just like I would expect to, coming up here testing sellers after rejections of sellers down here. Now we're going to come up here and test the buyers. Let's see if buyers are strong, rejecting the buyers right now, retesting the sellers. Are we going to get below the sell? Or are we going to get above the buy? Who's going to be the ones that's going to facilitate trade first in a particular direction between the buy and the sell of this area? Sellers are now starting to get a little bit stronger. If they're strong, we're going to get through this area. We should break through here, test back in here, and then break a lower low. If the market's really facilitating price and is going lower. If we break back up in here though, now we've got kind of a little bit of an issue because why would we come back up and test buyers again if we can't make a lower low? Facilitation of the auction here, participation is more probable to the upside than the downside at the moment. Oh my goodness, we're breaking another lower low. I'm so surprised right now that the market's going down. I mean, we didn't get the pullback. There's no fib here. I don't understand what's going on right now. We should be doing something else completely different than we're doing right now. And this is just manipulation because this is just weird. Price actions through my little area of support. We don't really have a higher high for me to be looking for any directional or any changes to what it is that I'm doing. I'm just going to go ahead and wait and see what happens to this buyer here. If this buyer starts to get out and we start to see facilitation or we see sellers stepping out and we turn around and start to move past above these areas, now I can probably get a little bit more aggressive on my stop. But right now I'm still looking for VPOC as a possible area around 27,000. We got another 15 points to move. Let's go. Why leave $200 on the table when I can just give this room and possibly get the $200? Where the price action's going up, and I'm gonna look at this wick. I mean, look, the buyers are in control. What are you talking about? We're coming right back to where buyers tested before over here that I indexed here. Now we're rejecting off of that area. And let's see if we can get below where the sellers are. If not, we're going to facilitate trade up here. And if we start to get back up here, if we break up here, I'm probably not interested in this position anymore. Since we're already down $300 today, let's just go ahead and make a little bit of money. And we'll say, okay, you know what? I'm going to go ahead and move my stop here to $350 just to lock in $50, take over break even of the 300. I mean, what are we talking about here? here, an additional 15 points. I mean, what's 15 points at this point amongst friends? I mean, what is it? Less than $200, or less than $400. No, I'm going to go ahead and wait. Now there's my 27,000. See, when we just touched 27,000, what do we have down here? We got sellers. We don't have buyers. We got sellers. Sellers are down here at the low. We could be trapped in with the lows. I don't really want to get back above these buyers because we went ahead and rejected off of this area where the buyers once were. Now I'm locking in $490, right? Now we have a bunch of sellers down here. If we don't break this low, I'm going to get pretty aggressive on this, and I might even move my stop down in here. Oh, wait a second. We're breaking lower lows again. Are you kidding me? What's going on? I have no clue whatsoever. Why would we be going down if there's large sellers in here? Wait, why don't we have our pullbacks? Wait, where's our fibs at? What's going on? Guys, this is the auction. I'm reading the auction through the whole time. I know exactly what price is doing. Anticipating every move that it's possibly making. Now we're getting pretty close to IB. We're down below here of the 27,000. I'm going to make a judgment call and I'm going to lock in 1,002 or $1,025. Why turn around and give back $1,400? We're already up $1,000. We have the price facilitation in here now. We're getting close to initial balance. This could be a higher low and moving back into value. Let's go ahead and get out so we can start hunting for long positions because the shorts probably aren't going to be, participating in the market much longer because of what the auction is telling us. We have buyers and sellers here communicating together and we can't make lower prices. We can't make lower prices right now. We got 230 buyers stepping into this market, 237, 228 sellers, over 500, and we can't break price action lower. Yeah, we probably got issues with this market. I'm going to get a little bit more aggressive now. We're going to actually act in a lot or lock in a little bit more money. I want to actually try to lock in, if I can, the full $300 or the full 1,000. Let's move the stop to 1325 and get ourselves out of this market. Oh wait, it's going to give me a little bit more. Beautiful. I'm just going to go ahead and trail this down and give it to, whoa, wait a second. What's going on here? Another low and more? This is actually telling us now that we probably have rejection down here in this area. I want to be out. 1260, 2 trades, 50% accuracy, up $1,260. Let's go. That is how you trade. Trading is not looking for fib numbers, not looking for mathematics. Trading is about reading the auction and what it's telling you it's doing. Could I be long here? Sure, absolutely. I really could. I even almost in my area here to go long. I'm waiting for a pullback now. $10.03. Just over 15 minutes of trading. $1,260 revenue. What is that on an hourly rate? Let's go. We're back here where the sellers were. Oh, and look, we barely broke the high. Oh my goodness, are you kidding me? We should probably sell right now. Not on this strength. Are you kidding me? Anticipate a rotation, at least a rotation down here to this area, hopefully down to this area. Why? It's the conversation. Test to test where the sellers were to see if buyers are willing to push price back up again. So it's going right now to the upside. Beautiful. Let it. I don't care. This isn't my opportunity. Let somebody off of a fib thing, whatever, go short here because they're off of a fib number and looking for a retracement. Beautiful. You do your thing. You knock yourself out. Have a good time. I'm waiting. I'm already up $1,026 on the day. Yeah, I mean, if I just ended the day right now with $1,260, I'm happy. I don't really care. Price action's going down? No way. Are you kidding me? What would it be going down for right now? Why isn't it going up after this nice big bar? Wait, it's going back up again? facilitating trade between the high volume areas. No different than it does over here on the other profiles. Same exact thing, same exact concept. Where am I looking at for my pullbacks? I'll say it again. Here. Here. This is where the buyers were. Here's the sellers, right? Before it breaks out, I'm anticipating it to come back down here. There it goes. There's the test into this area. Buyers are trying to buy, retesting again. We need to get through and tested the high again, coming back down again. Nice. You even tested these buyers here. Buyers responded again, pushing up price, but price can't quite make it yet. Buyers aren't quite strong enough to get through this area. Do we see continuation to test down in here? Because buyers weren't strong enough to go up anymore. Facilitate where buyers were once strong and see if they defend. Defending, can they get back above the high? Were they just last rejected? They're rejecting again a little bit here where the sellers are. Got back through the buyers again. Well, aren't you glad that you didn't go long on this bar now? Because then what would you be doing? Tested the same area. Look, a lower low here, a lower low. Look at all of the sell volume here, 81, 74, 19. Okay, now we're breaking lower. We're almost into my area here. Do I want to go long here? No, even though we went into the area. Why? Because I'm not buying areas. I am not going long on this down of a bar. Sellers are in control of this bar. I don't care what my areas are telling me. Sellers are in control of this bar. Big time. I'm not fading the control of the sellers in a particular bar. Could it retrace out of here? Absolutely, it could retrace out of here. I don't care. This bar is too big, too wide for me to turn around and try to trade out of. There's buyers stepping in here now. Price action's probably going to test the buyers. Wait, they're not. Not yet. That wasn't strong enough. We just got through it. Buyers are testing lower prices, or sellers are testing lower prices. Buyers defended again. Now we're back through this area. Now I'm anticipating price action to possibly pop back up here. Why? Because buyers are defending here. They should be willing to buy higher prices to move back up to this area again. Boom, just got there immediately. Sellers responded immediately. Now we have a new bar. But you don't want to buy the open of a new bar, especially off of a bar like this. You should expect price action to come back and test lower areas. Right? Now you have a nice bar, but look, you have resistance up here. We just hit the resistance, trading back through it again. Okay, well, are the buyers strong or are the sellers going to be strong? We don't know yet. Buyers are now strong. Now we have buyers. Now we have an up bar. We came back out of our area of retrace. I'm anticipating it to pop up here, but we're looking for a possible resistance here. So now I'm going to turn this into a scalp trade, and I don't really want to risk too much on this position, so I'm going to turn it into a break even. I'm looking for possible momentum to come back through here again because we tested where sellers were really strong in the conversation. I'm looking for momentum. Momentum didn't come in. Beautiful. Get me out. I don't care. Now I'm up 1,280 today on a little break-even trade right there, trying to get a little bit of momentum out of the high. If it breaks out of the highs, I don't care right now because I can always get back in on another pullback. Another pullback to where? Another pullback into this area that, buyers were once strong, a little bit lower, possibly back into this area, and we can look for another long position. Can I go long above here? I can. Absolutely. Now I don't really have a lot of room to the upside, and I don't really feel like it. So I'm just going to wait. If price action comes back down here and it gives me a nice little signal, I can go long again. Did I have areas I could possibly go long into here? Yes, we just went too far down here. We're testing an area here. I'm anticipating another possible area to be tested. It just didn't quite facilitate trade the way I want to. These are my setups. I get to observe this the way that I want to. I get to trade my auction the way I choose to trade my auction. Price actions coming back down in here again. We're looking for the pullback into where buyers once were, right? We're holding that level as support at the moment. And if we turn around and we break these highs, I could possibly go back into a long. And I just might do that. I don't know yet. Want to see what we do on the context of strength coming through there. But wait a second, the sellers are strong again right here where the buyers were. So we've been holding this area, a lot of bodies in here, facilitating trade in here. This isn't an area of rejection. I don't want to go long through here again. I'm anticipating rotation. Price actions back to the downside, but I don't want to go long down here because I'm not in an area to go long because my value area low is way down here. I'm on VPOC right now. Price actions trading in a range around VPOC. What is VPOC? Volume point in control. The largest volume traded in a particular area. Price actions trading around that area and price actions trading around this area in a nice little range. I want to stay out until the range actually breaks in one direction with some gusto, some momentum. And then I'm waiting for a pullback and I'll go back in direction of the momentum. Expecting what? At least the higher whatever to break for another scalp. Any questions? Any comments? Any concerns? Now, what do we have here? We got sellers again. 120 sellers. 5, 11, 30. We should anticipate this low to break. We're right back into the area of rejection again. What happens if we come back up here again to the buyers? What happened was we just broke lows and we weren't able to make an extended lower low by any stretch of the imagination. That can be rejection. We're testing lows. We're testing this area. You know what? I'm going to go ahead and I'm going to take a long position down here. We tested this area enough and buyers are coming back in again. And here's another scalp and I'm expecting price action to possibly come back up here. Wait a second. Sellers are strong in this market. But look, I've got this area above me, this area of auction above me. And I don't have any near sellers in here. 23 and 24 comparatively to 86 and 44. Sellers are drying up. Can I see some buyers step in, please? 45, beautiful. 61, 41, 50, not quite enough. We're going to test the lows. We're probably going to break this low. I might turn around and get stopped out here, but I don't really care because I can always get back into a long position if I need to. Did I try to catch a falling knife because of this bar right here? 100% I did. But because we were already testing into a low that's already been made. It wasn't the first time we came down here. It's not the first rodeo. I'm really starting to like this position because I'm liking the wicks at the lows. I'm going to give this some room. Because I'm going to scale into this position if it's going to give it to me. Did I come back down into the exact area that I'm looking for? No, but we kind of rejected from that area before anyhow, and we're making higher lows within the context of the rejection. Go ahead and come down a little bit lower and show me that buyers are willing to step back into the market and I can get in at a better price with 2 contracts and run her back up here. Let's go. Let's play. Threaten me with a good time. 100, 112, 101, 102 buyers, we need to see a higher high here. If we don't see a higher high, see, we're just facilitating between all of this high volume over here and this little high volume node right here. We're not making higher highs. This is probably going to come down now to lower prices. But I've already made my decision. I already know exactly what I'm looking at doing in this market because I am looking for facilitating for higher prices. I bought a range that's actually outside of my plan a little bit. And so I'm really focused on the short-term charts, which I really shouldn't be in the first place. But you know what? I made a decision and I'm not going to counter my decision now. Okay. I'm going to go ahead and stay with it because guess what? I'm up 1280 on the day, I'm only risking 655. I'm still going to be up. Oh my goodness, we came down to my area and we're rejecting. Wow. I'm really surprised that's happening. I had no idea. I mean, why would it? Why would I even have this area here? It makes no sense. Why would I pick this low? We're facilitating auction here of sellers and buyers conversing together with buyers on top of it. I'm anticipating buyers to defend here. This is why I moved my stop down here, but I don't want to get in on weakness. I want to get in on strength, and I'm going to add another contract on strength, and there's the strength. The only problem with adding here now is we have a buyer here that can act as possible resistance, and I'm not seeing buyers get above it. Well, there's the buyers above it now. Now we turn around, and now we're making higher highs, and now I'm a happy camper. Now I'm going to take one of these, and I'm going to move my stop to a break even as soon as I get up about $200. I'm going to move my stop to $20 just like I did before, and if I get stopped out of one of these, so be it. I don't really care, but I don't really want to hold the two contracts right now in this area because we kind of have lackadaisical price action. Oh, wow, look at this. Now I'm going to turn around. Wait, why do I have three here? God bless it. Stop, sell, one. Okay, now I'm going to turn around and I'm going to grab another one. I'm going to put this here, and now I'm going to turn around and I'm going to scalp this. And right now I want to get basically below this high right here, because this is our area of contention. This is where we're going to see the rejection. I'm locking in $165 on one, and I'm locking in $20 on another. There you go. That's it. That's all I'm doing at the moment. If these highs break, I'm going to get it more aggressive on this stop, and I'm leaving this stop in case we decide that we want to break highs and possibly break out of the range of the day. Price action's up 1140. Beautiful. You know what? If we don't break out of these highs, I want to lock in a little bit more. I have another runner behind me. Beautiful. But there's no reason to leave $11,000 on the table, in this market condition right now, because you know what? We're doing pretty good. So I'm going to lock in $430. Now we have another buyer in here. That's not a good sign. But you know what? I'm up $16.97 on the day, and what? 3 trades, 1 expense, 2 revenues. So I'm just going to wait, and I'm just going to wait for this price action to turn around and facilitate trade and see exactly what it's going to do to me, because I don't really care at the moment. Sir, how you trade? Sir, got to say you are an amazing trader. So, how are you trade on FOMC CPI news? Do you prefer to trade after news when there is low manipulation or a high volume? So, first of all, I don't trade in the afternoons in the FOMC meetings. I don't know. I don't play around with that. There's a difference between volatility and momentum. What's the difference between volatility and momentum? Volatility moves so fast that you're not able to act around it. Momentum moves fast enough that you can get good price action, but slow enough that you can still act. And if it's high volatility, I can't act. I don't even want to play. Why waste my time? There's no opportunity there for me. I need momentum, not volatility. But what I will do sometimes, though, I will tell you this, I will trade into news at 8:30 in the morning sometimes. Because a lot of times, if you have a signal before 8:30, the news moves in direction of the auction anyhow. Why? Because your monkeys aren't playing, because they're not playing at 8:30 in the morning. They're waiting for the open. Who's playing there? The position traders, based off of the news. And the news is usually already lined up with the auction because the auction's already priced in. That's where the manipulation is. They're communicating with another through newspapers like the Wall Street Journal, those type of things. They're already positioning because somebody already knows something and they've already talked about it. And so it's already priced into the market. And so the auction's already prime right there, and the position traders know that. Well, we're filling up here again, so I'm going to go ahead and get a little bit more aggressive on this position. I'm going to move my stop up here, and I'm going to go ahead and lock in another $185. I could do 200, but I'm going to do 185. Just leave it here just in case, because we're turning around and rejecting up here. I'm just not interested in 1880 on a day, and we're not trending. Everybody else be like, oh my God, we're in a range. I mean, look at this range that we're in. I got chopped up. $10.18, $1,800, 3 or 4 trades, 3, 4, I don't remember, 1 expense, up 1880. It's not even really to let go. Let's go at this point in time, right? I mean, it is what it is. We didn't get great positions, We got good enough positions that we're up almost $2,000 the first thing in the morning on really a single contract. I did hit two contracts down here because I did scale into this area, but that's only because I had the wherewithal that we're trading in value, and I had the wherewithal to know that we had rejection in here. And sure enough, the rejection took place. And I drew this line a long time ago, but I drew it after I built my plan. And I'm trading still in the direction of the plan. And the only trade that I took an expense on was the one that was completely against my plan when I tried to go long the breakout here. And what's the hardest market for me to trade that I've already said is going to be the hardest? And that's the shift between moving back into value or breaking out to the upside for a trend continuation. That's the only place where I took an expense. And how many people do you think would be chopped up and chewed out trying to trade this area right here because they're trying to go long up here and they're trying to go short down here? And those that are trying to go long in here, are they going to hit their 2-to-1 risk reward ratio by the time they enter, or their 1-to-1? This is why you're hoping and praying on a 2-to-1 or a 1-to-1 risk reward ratio, because you never know what the range of the market's going to be. And didn't I already say that we can either one, break out to the upside, or two, have a pretty narrow day and continue into the consolidation like a spring? I believe I mentioned that too when I first created this area, right? Too many things lining up. How can I know all of that information and speak all that stuff and it comes to pass the way it did? If there wasn't something to auction market theory, can ICT give this to you, or whatever the heck the freaking three letters are? And I'm not trying to pick on anybody. Again, it's just put the information together and what are you observing? Any of your ICT guys, can they break down the market like this? Can they tell you where the rotations are going to be and what they're anticipating the market to do? And the market does exactly what they're talking about? Seed, you're quite quiet over there. You still with us? Did my voice lull you to sleep? And right now the market's not even trading in an area where I can even tell you what it's doing or what it's going to do. We have this nice little momentum to the downside, which absolutely looks great, and then we have an inside bar followed by what right now is another inside bar. Yeah, the market doesn't know what it wants to do. So there's no sense in even saying anything at the moment because we're just trading in an absolute range right now, coiling, and we got to wait to see who's actually going to take charge in this next move. The next move is going to happen, but I cannot tell you what direction that move is going to be. I have absolutely no idea. In terms of auction market theory, it can go either direction because we're currently trading in value. Where are we trading at? Just above VPOC. Just above VPOC and higher highs. So I'd anticipate this to break and retest the highs on the day is what I would expect it to do. But price action's trading in such a way that that's very difficult to determine with any level of probability. And at the point, I'm just kind of guessing and just trying to give an answer because it looks good. But basically, the reason why I say that, though, and I will show you actually there is a reason for it. We came in, we tested these lows, we couldn't get lower, we can't get into unfair lows at all. Price action traded around this VPOC, and now we're starting to break out away from VPOC. I'm anticipating price action to come back and test value area high, IB high, before we come down into IB low or value area low. That's my anticipation. The problem is we got this little buyer up here, which is absolutely acting as resistance to this market. And so until that breaks, we're in a range. And if we don't break it, eventually, the more times we test it, the lower the probability we're going to come back and break it. And when we're testing it, we're making lower highs. Lower high, equal high, or one tick lower high, actually. Well, that's equal high, lower high, lower high. Now we're testing in the range. And now we break this high, but still equal highs, still rejecting. And now look at the buyers, 48.20, right? 35.33, this is going to break. This is going to break, and it's going to break with a little bit of momentum. Watch. Oh, seller in here. Now we're going to facilitate trade between these two areas. We break that low, price action is going to facilitate trade again, and we're probably going to rotate all the way back down here again because this is where our most recent volume is. And I would anticipate a retest of these sellers because of this seller here to see if buyers respond at these lower prices. That would be my anticipation. This is where I'd be looking for a pullback. And if we break it, then it doesn't pull back, well then beautiful. My momentum area is still in play. Now we have another seller in play, right? But look, 146, 131, 143, these sellers are unable to bring price down right now. There we go, we hit a little bit of a lower price, right? Definitely don't want to be buying off of this, and you definitely don't want to be selling off of this. This is an area of contention right here. You don't want to be in areas of contention. You want to be in after the contention has broken in a particular direction and let price and volume tell you such. And I'm way too focused on this short-term chart right now and not nearly as focused as I need to be on my long-term charts, because I'm trying to teach and show the auction within the short time frame. And that's where you see the auction in this particular time frame on these charts. I wish I could get this back to actually see the bars. There we go. Much better. I like that much better. There. Perfect. I like it. Now, what we have here is 1472. Look at the lack of sellers up here. Look at the lack of selling up here. Okay, we do have this buyer at 73. We have these buyers at 83 and 81. Still a little bit less buying, but look at these sellers stepping in here comparatively to over here. Okay, and price action is not making your lower lows, right? But you only have 81 sellers compared to 179 and 139, right? You have less buyers, okay? But it looks like the sellers are drying up. We get some buyers stepping in here, anticipate the momentum I was talking about earlier. A little bit of momentum. Let's go ahead and take this first scalp. Why not? I don't know what this is going to do at this point in time. This is outside of my plan. I'm just trading this short time frame chart, and I just want to turn around and see, what this is going to do, because I'm so hyper focused on the short-term chart. I might as well just go ahead and take a stab at it and anticipate momentum coming into the market. And I'm not putting a stop in. Why? Because I'm going to do an asset management on this instead of trading. That's what I'm going to do. Let's do that. I like that idea. Get into a high in the absolute worst position possible, right? Because you're just hyper focused on the short-term charts, right? And it's not a mistake. It's like you expected something. But now I'm going to turn around and I'm going to asset manage myself in this position itself. That I love it. I like that idea. Where are we at on the higher time frame charts? There's VPOC right here. Oh, you know what? This is an issue. This is a big issue. That fixes the issue. That's much better. We're off of VPOC right now. You know what? Let's just go ahead and add another one. Let's just do it. And why not? Coming off of VPOC, we have a trapped seller below us possibly. We can break this seller, and if we do, we're going to rotate back down into this area, right? That's just what we're going to do. We have a resistance above us. We got our support below us. We know exactly where we're at. I'm going to manage this in the context of 5 cars based on what we have for a $300,000 account for that account that we looked at. And I'm going to try to asset manage myself into this position is exactly what I'm going to do. Because it was a dumb position to begin with in the first place, I'm going to go ahead and put a limit up here to sell one right about here and lock in kind of like $40 in case we go up there because I do want to limit my risk because I do have 2 on, right? And this is a position and it does matter. And I did choose to take the position, even though I don't have a long time frame reason to take the position. I am going to turn around and manage this properly. Right. Instead of just saying, oh, well, this is just dumb trade. And, it didn't happen anyway. I wouldn't have done that live and whatever. There we go. There's $40. We got $40 on one contract. We're in one contract, right? We're in long. So I'm going to go ahead and put a stop in here. And because this position, we don't know if momentum is coming in. I'm going to be very, very leery of being in this position as well. Even though we are starting to break out a little bit, but we're not seeing the momentum yet. We saw a 2-tick high. I'm going to put my target right in here about $70, and I'm going to wait and see if we hold this area. I don't want to come back down into my open, right into the entry. Momentum isn't coming in like I anticipated, and if momentum isn't in, the market's doing something else. So my reason for being in is no longer valid because the market is doing something else than the momentum I was anticipating to come into the market. Up 1922 on the day. Guess what? I'm going to be just under 2,000. I don't like that idea, so I'm just going to put it at 80. That puts us at, we might get a little slippage. I'm going to put it as 100. I'm going to put it as 100 just to be $2,000 up on the day because, it sounds like a good round number and I like that number of 2,000 in a day. It's 10:31 right now, less than an hour of trading, almost up $2,000. I will have $2,000 locked in if I get stopped out. We got a buyer in here, which is going to probably act as resistance because I don't see buyers really stepping in at the high and we don't really have momentum coming into this market. Even though we're breaking highs, we still don't have a momentum. If we do come back and see sellers in here, there's our auction right there. My stop is still below auction, but I still don't see a lot of momentum. Yes, higher highs, but not a lot of momentum. We're up 400. I've already locked in 100. I'm kind of cool with that. I don't need a lot more than that at the moment. And now we have momentum, and now I put in my stop right below this high. Now I'm up 205. We're up 450. Momentum did come into the market. Price action is turning around and rejecting a little bit. I'm anticipating a cycle between these two. Because I'm anticipating a cycle between the two, I'm going to go ahead and get myself a little bit more profit. We're locking in 305. We're up 500. I'm only leaving $200 on the table. Price action's having a hard time coming down. I want to see if we get above the open. If we get above the open and break the high, I'm going to move my stop a little bit more and pull out as much from this market as I possibly can. Price action is coming back into the area of resistance. Now I'm locking in 440. The maximum we were up is what, like 550, 500? We're at 485 right now, a little bit over 500, 525. I'm going to continue to do the same thing. 455, 475, up 565, staying at 475, up 500, another little area of resistance. We're going to pop ourselves up a little bit more, up 650, locking in 550, up 680. We're going to go ahead and lock in 600, still up 680. We're only risking 800 out of the full position, up 655, up 650. Nothing's actually moving up. We got buyers and sellers above us. There's the area of auction. I'm stopped out up $2,525 on the day. It's 10:32 and I'm done. Any questions? Any comments? Any concerns? So Darren, my job work done. Thanks. You appreciate your time and effort. Long live better life. So Darren, thank you so much. You have yourself an amazing day. Thank you for being here. Thank you for giving me the opportunity to do this. And again, you're doing nothing wrong. Trade your convictions. Okay. Just understand that the institutions are not using those mathematical numbers. Okay. They're just not. That's a good marketing ploy is what that is. And that, to me, that sucks. That people get sucked, that they suck people in, getting them to believe that. All right? So just be careful out there. And it's not that ICT is bad by any stretch of the imagination. It's not it at all. Okay? But it's going to take time to do the strategy, and just remember it's going to work well in particular market and conditions, and it's not going to work so well in others. All right. Seed, I don't think you're here anymore. You haven't said anything for a while. Is anybody else here? Anybody at all? If anybody is here, just type a one in the chat. Just a one. And give you a couple minutes to put that one in here. And if there's no one, my job, my work is done here as well. And I am going to go and start enjoying my weekend before I get back to work tomorrow and start testing things. All right, no ones. Well, thank you very much, everybody. I truly appreciate you being here. I truly appreciate your time. I hope everyone has an absolute amazing and blessed day. Enjoy your weekend, be safe, and I shall catch everybody on Monday. Enjoy.